Question 1. Ms. Lee is a resident of Alaska and is considering purchasing a long-term care insurance policy. According to Alaska Statute 21.89.030, which of the following statements is most accurate regarding mandatory requirements for long-term care insurance policies in Alaska? A. The policy must offer benefits for home health care only. B. The policy cannot include benefits for institutional care. C. The policy must provide inflation protection for benefits. D. The policy must offer a waiver of premium benefit if the insured becomes disabled. The correct answer is C. The policy must provide inflation protection for benefits. Alaska Statute 21.89.030 outlines specific consumer protection requirements for long-term care insurance policies sold in the state. While option A and B restrict benefits, they are not mandatory requirements. Option D might be offered by some policies but is not mandatory. Question 2. Mr. Garcia is a life insurance agent licensed in Alaska and wants to recommend a disability income insurance policy to his client. When explaining the benefits of such a policy, which of the following statements should Mr. Garcia avoid according to Alaska insurance regulations? A. The policy will replace a portion of the client's income if they become disabled. B. The policy can be designed to pay benefits for a specific period or until retirement. C. Premiums paid for disability income insurance are tax-deductible in most cases. D. Owning a disability income insurance policy can help a client maintain their financial security in case of disability. The correct answer is C. Premiums paid for disability income insurance are tax-deductible in most cases. While the other options accurately describe disability income insurance benefits, the deductibility of premiums is a tax issue and not something regulated by Alaska Insurance. It's important for Mr. Garcia to avoid making misleading statements about tax implications. Question 3. An Alaska resident is applying for a health insurance policy. They have a pre-existing medical condition. According to Alaska Statute 21.89.220, which of the following statements is true regarding guaranteed issue health insurance policies in Alaska? A. Guaranteed issue health insurance is not available in Alaska. B. All health insurance companies in Alaska must offer guaranteed issue policies. C. Guaranteed issue policies cannot exclude coverage for pre-existing conditions. D. Guaranteed issue policies typically come with higher premiums compared to non-guaranteed issue plans. The correct answer is C. Guaranteed issue policies cannot exclude coverage for pre-existing conditions. Alaska Statute 21.89.220 mandates that health insurance companies offer guaranteed issue policies to meet the needs of individuals with pre-existing conditions. These policies cannot deny coverage or charge higher premiums based on pre-existing conditions. Option D is true, but it's not the most accurate differentiating factor between guaranteed and non-guaranteed issue policies. Question 4. Ms. Hernandez is a resident of Alaska and is considering purchasing a Medicare supplement policy. According to Alaska Administrative Code Title 3 AACO 2.2010, which of the following statements is most accurate regarding the standardization of Medicare supplement policies in Alaska? A. All Medicare supplement policies offered in Alaska must have identical benefits. B. Standardized Medicare supplement plans are identified by letters A through J. C. Benefits and premiums can vary between different companies offering the same standardized plan. D. Ms. Hernandez cannot purchase a Medicare supplement policy unless she is already enrolled in a Medicare Advantage plan. The correct answer is C. Benefits and premiums can vary between different companies offering the same standardized plan. Alaska adopts the National Association of Insurance Commissioners, NAIC, model regulations for Medicare supplement policies. These policies are standardized by design, plans A through J, but allows some flexibility for insurers to offer variations in benefits and premiums while adhering to minimum standards set by the NAIC model. Question 5. Mr. Anderson is a life insurance agent licensed in Alaska and is explaining the concept of insurable interest to a client interested in purchasing a life insurance policy. Under Alaska Statute 21.12.010, which of the following scenarios would demonstrate an insurable interest? A. Mr. Anderson recommends that his client, Ms. Jones, purchase a life insurance policy on her neighbor, Mr. Smith. B. A business partner wants to purchase a life insurance policy on Mr. Anderson to cover potential financial losses if Mr. Anderson dies. C. A close friend wants to purchase a life insurance policy on Mr. Anderson out of gratitude for their friendship. D. A charity wants to purchase a life insurance policy on a major donor with no familial or business relationship. The correct answer is B. A business partner wants to purchase a life insurance policy on Mr. Anderson to cover potential financial losses if Mr. Anderson dies. Alaska Statute 21.12.010 defines insurable interest as a lawful and substantial economic interest in the continued life of another person. In scenario B, the business partner has a financial stake in Mr. Anderson's life due to their business partnership. The other scenarios lack a demonstrably financial stake. Question 6. An Alaska resident is applying for a health insurance policy and wants to know about their rights to appeal a claim denial. According to Alaska Statute 21.89.320, what is the first step this resident should take if their health insurance claim is denied? A. File a lawsuit against the health insurance company. B. Contact their employer if they have employer-sponsored health insurance. C. Request an internal review of the denial decision from the health insurance company. D. File a complaint with the Alaska Division of Insurance. The correct answer is C. Request an internal review of the denial decision from the health insurance company. Alaska Statute 21.89.320 outlines the right to appeal a health insurance claim denial. The first step is to request an internal review by the health insurance company itself. This allows them to potentially reconsider the decision. If the internal review is unsuccessful, the resident can then pursue options like contacting their employer or filing a complaint with the Alaska Division of Insurance. Question 7. Ms. Lee is a resident of Alaska and is considering purchasing a critical illness insurance policy. According to Alaska Statute 21.89.041, what is not typically covered under a critical illness insurance policy in Alaska? A. Hospitalization for a covered critical illness. B. Surgery for a covered critical illness. C. Loss of income due to a covered critical illness. D. Preventative care services. The correct answer is D. Preventative care services. Alaska Statute 21.89.041 defines critical illness insurance and outlines required and prohibited benefits. Critical illness insurance focuses on specific critical illnesses like cancer, heart attack, or stroke. It typically covers hospitalization, surgery, or other medically necessary services related to the covered illness. Preventative care services are not directly tied to a critical illness and are generally excluded from these policies. Question 8. Mr. Garcia is a life insurance agent licensed in Alaska and is placing life insurance with a minor child as the beneficiary. According to Alaska Statute 21.12.060, how will the death benefit be handled if the minor child is still a minor when the insured person dies? A. The death benefit will be paid directly to the minor child. B. The death benefit will be held in a trust until the child reaches adulthood. C. The death benefit will be paid to the custodial parent of the minor child. D. The court will appoint a guardian to manage the death benefit on the minor child's behalf. The correct answer is D. The court will appoint a guardian to manage the death benefit on the minor child's behalf. Alaska Statute 21.12.06 addresses the situation where a minor is named as a beneficiary of a life insurance policy. Minors are typically not considered legally competent to manage large sums of money. The court will likely appoint a guardian or conservator to manage the death benefit until the child reaches the legal age of adulthood as defined by Alaska law. Question 9. An Alaska resident is enrolled in a group health insurance plan through their employer. They are concerned about the privacy of their medical information. The Health Insurance Portability and Accountability Act, HIPAA, is a federal law that protects the privacy of individually identifiable health information. According to HIPAA regulations, which of the following statements is true? A. An individual can never access their own medical records. B. Health insurance companies can share an individual's medical information with anyone without their consent. C. An individual has the right to request a copy of their medical records and request amendments if necessary. D. Employers can freely share an employee's medical information with anyone in the company. The correct answer is C. An individual has the right to request a copy of their medical records and request amendments if necessary. HIPAA is a federal law that safeguards the privacy of a person's medical information. It grants individuals specific rights regarding their health information, including the right to access a copy of their medical records and to request amendments if they believe the information is inaccurate or incomplete. Options A, B, and D all violate HIPAA privacy protections. Question 10. Ms. Hernandez is an agent selling accident insurance in Alaska. A potential client inquires about the difference between accident insurance and disability income insurance. Which of the following statements most accurately describes the key distinction between these two coverages? A. Accident insurance only covers benefits for accidental injuries, while disability income insurance covers any disability, accidental or illness-related. B. Accident insurance provides a lump sum benefit upon an accident, while disability income insurance replaces a portion of lost income due to disability. C. Accident insurance has a longer waiting period before benefits begin compared to disability income insurance. D. Accident insurance is typically more expensive than disability income insurance. The correct answer is B. Accident insurance provides a lump sum benefit upon an accident, while disability income insurance replaces a portion of lost income due to disability. While both policies offer financial protection, they differ in their focus. Accident insurance is triggered by a specific accidental event and typically provides a lump sum payout to cover medical bills or other expenses. Disability income insurance kicks in when a disability, accidental or illness-related, prevents the insured from working and earning income. It replaces a portion of their lost wages for a specified period. Question 11. Mr. Anderson is an Alaska resident considering a Medicare Advantage plan. According to Alaska Statute 21.89.52, what is an advantage of enrolling in a Medicare Advantage plan compared to original Medicare? A. Medicare Advantage plans typically have lower premiums compared to original Medicare. B. Medicare Advantage plans offer a wider range of benefits beyond hospitalization and medical coverage. C. There are no network restrictions with Medicare Advantage plans, allowing visits to any doctor. D. Individuals can be enrolled in both a Medicare Advantage plan and a Medicare Supplement plan simultaneously. The correct answer is B. Medicare Advantage plans offer a wider range of benefits beyond hospitalization and medical coverage. While both options provide health coverage for seniors, Medicare Advantage plans offer additional benefits not typically covered by original Medicare. These may include vision, dental, hearing coverage, wellness programs, or prescription drug coverage. Option C is not always true, as some Medicare Advantage plans have network limitations. Option D might be possible in some cases with careful plan selection, but it's not universally allowed. Question 12. An Alaska resident is nearing retirement and is concerned about long-term care costs. They are interested in learning more about Medicaid long-term care coverage. According to Alaska Statute 47.370, Medicaid eligibility for long-term care services is determined based on what primary factor? A. Age of the applicant. B. Diagnosis of a specific medical condition. C. Income and asset levels of the applicant. D. Availability of space in a Medicaid-certified long-term care facility. The correct answer is C. Income and asset levels of the applicant. Medicaid is a needs-based program that provides health coverage for low-income individuals and families. In Alaska, eligibility for Medicaid long-term care services is primarily determined by the applicant's income and asset levels. Individuals must meet specific financial thresholds to qualify for Medicaid coverage for nursing home care or other long-term care services. Options A, B, and D might play a role, but income and assets are the primary factors. Question 13. Ms. Lee is a resident of Alaska and is considering purchasing a cancer insurance policy. According to Alaska Statute 21.89.042, what is one of the key limitations on benefits typically found in cancer insurance policies? A. Cancer insurance policies will only cover certain types of cancer diagnoses. B. Cancer insurance benefits are not paid if the cancer is successfully treated. C. There is a maximum lifetime benefit payout under most cancer insurance policies. D. Cancer insurance policies require the insured to undergo genetic testing before coverage is issued. The correct answer is C. There is a maximum lifetime benefit payout under most cancer insurance policies. Cancer insurance policies are designed to provide financial assistance for the high costs associated with cancer treatment. While they cover a variety of cancer diagnoses, option A, successful treatment does not negate the benefit payout, option B. However, most cancer insurance policies have a maximum lifetime benefit payout amount. Once this limit is reached, the policy will no longer provide financial assistance for subsequent cancer diagnoses or treatments. Option D might be required by some insurers but is not a universal limitation. Question 14. Mr. Garcia is a life insurance agent licensed in Alaska and is explaining beneficiary options to a client. Under Alaska Statute 21.12.050, how can a policyholder designate a beneficiary for their life insurance policy? A. The beneficiary designation must be witnessed by two people but does not require any specific form. B. The beneficiary designation can be written on a separate piece of paper and included with the policy paperwork. C. The life insurance company will typically provide a beneficiary designation form that must be completed and signed. D. Beneficiary designation can only be done by naming the beneficiary directly within the life insurance policy itself. The correct answer is C. The life insurance company will typically provide a beneficiary designation form that must be completed and signed. Alaska Statute 21.12.050 outlines the process for designating a beneficiary for a life insurance policy. While some states allow informal designations, option B, Alaska typically follows the method outlined in option C. The life insurance company will provide a beneficiary designation form that clearly identifies the beneficiary, IEs, and the percentage of the death benefit they will receive. This form should be completed, signed by the policyholder, and kept on file with the insurance company. Option D might be possible in some cases, but a separate form is the most common and reliable method. Question 15. An Alaska resident is considering applying for health insurance through the Federal Health Insurance Marketplace established by the Affordable Care Act, ACA. According to the ACA, What is one of the factors used to determine eligibility for premium subsidies to help with the cost of health insurance? A. Age of the applicant. B. Employment status of the applicant. C. Household income compared to the federal poverty level, FPL. D. Health status or pre-existing medical conditions of the applicant. The correct answer is C. Household income compared to the federal poverty level, FPL. The ACA established health insurance marketplaces where individuals can shop for and compare health insurance plans. Premium subsidies are available to help qualifying individuals afford coverage. A primary factor used to determine eligibility for these subsidies is household income compared to the federal poverty level, FPL. Those with incomes below a certain percentage of the FPL qualify for larger subsidies to make health insurance more accessible. While options A and B might influence plan options, they are not the primary factors for subsidy eligibility. Option D is not considered under the ACA for marketplace enrollment. Question 16. Ms. Hernandez is an agent selling disability income insurance in Alaska. A client asks if there are any grace periods associated with disability insurance premium payments. According to Alaska Statute 21.89.130, what is true regarding grace periods for disability income insurance premiums? A. There is no mandatory grace period required by Alaska law for disability income insurance. B. All disability income insurance policies in Alaska must offer a 30-day grace period for premium payments. C. The specific grace period for disability income insurance premiums depends on the policy provisions set by the insurer. D. A grace period for disability income insurance only applies if the insured becomes disabled before the premium due date. The correct answer is C. The specific grace period for disability income insurance premiums depends on the policy provisions set by the insurer. Alaska Statute 21.89.130 focuses on policyholder protections but doesn't mandate specific grace period lengths. While some states have minimum grace periods, in Alaska, the grace period for disability income insurance premiums is determined by the individual policy provisions set by the insurer. It's crucial for Ms. Hernandez to explain that clients should carefully review their policy documents to understand the specific grace period offered by their chosen plan. Question 17. Mr. Anderson is an Alaska resident considering a Medicare supplement plan. According to Alaska Administrative Code Title 3 AECO 2.2020, which of the following statements is accurate regarding guaranteed renewable Medicare supplement policies in Alaska? A. The insurance company can cancel a guaranteed renewable Medicare supplement policy at any time. B. Guaranteed renewable Medicare supplement policies can only be offered to healthy individuals. C. Guaranteed renewable Medicare supplement policies cannot increase premiums based on the policyholder's age. D. Guaranteed renewable Medicare supplement policies offer the same benefits throughout the life of the policy. The correct answer is D. Guaranteed renewable Medicare supplement policies offer the same benefits throughout the life of the policy. Alaska Administrative Code Title 3 AECO 2.2020 adopts the NAIC model regulations for Medicare supplement policies. Guaranteed renewable is a key feature. Once issued, the insurance company cannot cancel the policy as long as premiums are paid on time. Additionally, these policies offer a guarantee that the benefits will remain the same throughout the life of the policy, even if the policyholder's health status changes. Option C might be true for some plans, but it's not universally guaranteed. Question 18. An Alaska resident is enrolled in a health insurance plan that utilizes a network of preferred providers, PPO. They are considering visiting an out-of-network provider for a medical service. According to Alaska Statute 21.89.210, what is most likely to be true regarding coverage for out-of-network providers under a PPO plan? A. The plan will cover the full cost of the out-of-network service. B. The plan will likely cover a smaller portion of the cost compared to in-network providers. C. The plan requires no referral from a primary care physician to visit an out-of-network provider. D. There is no coverage for out-of-network providers under a PPO health insurance plan. The correct answer is B. The plan will likely cover a smaller portion of the policyholder's cost compared to in-network providers. PPO plans offer flexibility in choosing providers. However, they typically incentivize using in-network providers who have contracted rates with the insurance company. While out-of-network coverage might be available under a PPO plan, the policyholder will likely face a higher out-of-pocket cost due to lower reimbursement rates from the insurer. Option A is highly unlikely. Option C might depend on the specific plan design. Option D is incorrect. PPO plans offer some coverage for out-of-network providers, but with a higher financial burden on the policyholder. Question 19. Ms. Lee is a resident of Alaska and is considering purchasing a long-term care insurance policy. According to Alaska Statute 21.89.31, what is one of the mandatory consumer protection provisions for long-term care insurance policies in Alaska? A. The policy must cover all costs associated with any long-term care needs. B. The policy cannot be canceled by the insurance company after a certain period. C. The policy must offer a guaranteed death benefit to the beneficiary. D. The policyholder has a right to a refund of all premiums paid if they don't use the long-term care benefits. The correct answer is B. The policy cannot be canceled by the insurance company after a certain period. Alaska Statute 21.89.031 outlines specific consumer protections for long-term care insurance policies. One crucial provision is guaranteed renewability. This ensures that once issued, the insurance company cannot cancel the policy as long as premiums are paid on time. This protects policyholders from losing coverage later in life when they might need long-term care services the most. Options A, C, and D are not all guaranteed benefits under Alaska's regulations. Question 20. Mr. Garcia is a life insurance agent licensed in Alaska and is explaining replacement of life insurance to a client. According to Alaska Statute 21.12.130, what does an agent completing a replacement life insurance transaction most likely need to obtain from the replacing insurer? A. A copy of the client's medical records. B. A detailed financial needs analysis of the client. C. A document explaining the benefits and features of the new policy. D. Documentation outlining the reasons for replacing the existing life insurance policy. The correct answer is D. Documentation outlining the reasons for replacing the existing life insurance policy. Alaska Statute 21.12.130 addresses replacement of life insurance and emphasizes informing consumers about the potential consequences of replacing an existing policy. One requirement is for the replacing insurer to obtain a written explanation from the agent detailing the reasons why the client is considering replacing their current life insurance policy. This documentation helps ensure the replacement is suitable for the client's needs and avoids situations where a new policy might not be in their best interest. Question 21. Ms. Jones is a resident of Alaska and is considering purchasing a disability income insurance policy. She is concerned about the financial impact if she becomes disabled and unable to work. According to Alaska Statute 21.89.120, which of the following statements is most accurate regarding the definition of disability under a typical disability income insurance policy in Alaska? A. Disability is defined as any illness or injury that prevents an individual from working in any occupation. B. Disability is defined as the inability to perform the specific duties of the insured's current job. C. Disability is defined as a medically determinable condition that significantly limits the ability to perform any gainful employment. D. The definition of disability is standardized across all disability income insurance policies in Alaska. The correct answer is C. Disability is defined as a medically determinable condition that significantly limits the ability to perform any gainful employment. Alaska Statute 21.89.120 allows flexibility in policy design, but the definition of disability is a crucial element in disability income insurance. While option A might seem appealing, most policies focus on functional limitations, not just any illness or injury. Option B is too narrow, as the insured might be able to find alternative work outside their specific job title. Option D is incorrect. There can be variations in policy wording, but a common definition aligns with option C. This definition requires a medically verifiable condition that significantly restricts the ability to perform a broad range of work duties, not just the insured's current job. Question 22. Mr. Garcia is a life insurance agent licensed in Alaska and is placing a life insurance policy with a minor child as the beneficiary. Ms. Hernandez, the policyholder, is concerned about managing the death benefit until the child reaches adulthood. According to Alaska Statute 21.12.070, what is one option available to Ms. Hernandez regarding the death benefit payout for the minor child? A. Ms. Hernandez can choose to have the death benefit paid out in a lump sum directly to the minor child. B. Ms. Hernandez can establish a trust to hold the death benefit until the child reaches legal age. C. The death benefit will automatically be paid to a court-appointed guardian for the minor child. D. Ms. Hernandez can name a custodian to manage the death benefit on the child's behalf. The correct answer is D. Ms. Hernandez can name a custodian to manage the death benefit on the child's behalf. Alaska Statute 21.12.070 addresses situations where a minor is named as a beneficiary of a life insurance policy. Minors are not considered legally competent to manage large sums of money. Option A is not allowed due to the minor's age. While option C might occur if no other arrangements are made, Ms. Hernandez has options. Alaska law allows her to designate a custodian under the Alaska Uniform Transfers to Minors Act, Alaska Statute 21.36.010 to 21.36.920. This custodian would be responsible for managing the death benefit for the minor's benefit until they reach adulthood. Question 23. Ms. Lee is a resident of Alaska and is considering a Medicare supplement plan. According to Alaska Statute 21.89.530, what is an important factor to consider when comparing Medicare supplement plans offered by different insurance companies? A. All Medicare supplement plans with the same plan letter, e.g., Plan G, will have identical benefits in Alaska. B. Ms. Lee should prioritize the plan with the lowest monthly premium regardless of the covered benefits. C. Medicare supplement plans can offer additional benefits beyond what original Medicare covers, but these extras may vary between companies. D. The financial stability rating of the insurance company offering the Medicare supplement plan is irrelevant when making a selection. The correct answer is C. Medicare supplement plans can offer additional benefits beyond what original Medicare covers, but these extras may vary between companies. Alaska Statute 21.89.530 outlines regulations for Medicare supplement plans. While option A might seem convenient, it's not entirely true. Medicare supplement plans are standardized by design, plans A through J, but allow some flexibility for insurers to offer variations in benefits beyond the standardized core set. This means that Plan G from Company X might not offer exactly the same supplemental benefits as Plan G from Company Y. Ms. Lee should carefully compare the specific benefits and costs of each plan offered by different insurance companies to find the one that best suits her needs and budget. Option B. might be tempting, but prioritizing cost over coverage could leave her with gaps. Option D is not advisable. A financially secure company is less likely to face difficulties meeting its obligations to policyholders. Question 24. Mr. Garcia is a life insurance agent licensed in Alaska and is explaining accidental death benefits to a client. According to Alaska Statute 21.12.110, what typically differentiates an accidental death benefit rider from a standalone accidental death insurance policy? A. Accidental death benefit riders are only offered by life insurance companies, while accidental death insurance can be purchased from a wider range of carriers. B. Accidental death benefit riders provide a death benefit only if the cause of death is accidental, while standalone accidental death insurance covers any cause of death. C. Accidental death benefit riders typically offer a smaller death benefit payout compared to standalone accidental death insurance policies. D. Accidental death benefit riders are subject to the underwriting requirements of the base life insurance policy, while standalone accidental death insurance might have less stringent qualification criteria. The correct answer is D. Accidental death benefit riders are subject to the underwriting requirements of the base life insurance policy, while standalone accidental death insurance might have less stringent qualification criteria. Alaska Statute 21.12.110 allows accidental death benefits to be offered as both riders on life insurance policies and as standalone accidental death insurance policies. The key difference lies in underwriting and policy structure. Option A is not necessarily true. Some standalone policies might also be offered by life insurance companies. Option B is incorrect. Both options pay a benefit if the death is accidental. Option C can be true, but it's not the defining factor. The crucial distinction is in underwriting. Accidental death benefit riders are attached to existing life insurance policies, so the applicant's health and insurability for the base life insurance policy will determine eligibility for the rider as well. Standalone accidental death insurance policies might have separate, potentially less strict, underwriting requirements. Question 25. Ms. Lee is a resident of Alaska and is looking to supplement her employer-provided health insurance plan. She is particularly interested in a plan that will cover additional costs associated with hospitalization. Which type of health insurance plan would be most suitable for Ms. Lee's needs? A. HMO, Health Maintenance Organization. B. PPO, Preferred Provider Organization. C. Medicare Supplement Insurance, Medigap. D. Long-Term Care Insurance. The correct answer is C. Medicare Supplement Insurance, Medigap. Medicare Supplement Insurance, Medigap, plans are designed to help fill the gaps in traditional Medicare coverage. These plans can help cover costs such as deductibles, coinsurance, and copays for hospitalization, doctor visits, and other covered services. While HMO and PPO plans offer comprehensive health insurance coverage, they may not necessarily address the specific needs Ms. Lee is looking for, which is coverage for hospitalization costs. Long-term care insurance is designed for long-term care needs, not necessarily hospital stays. In Alaska, Medigap plans are regulated under state and federal law to ensure standardized benefits across different carriers. Question 26. Mr. Hernandez is a life insurance agent licensed in Alaska and is explaining disability income insurance to a client. The client asks Mr. Hernandez how long they would have to wait to receive benefits after they become disabled. According to Alaska regulations, what is the maximum allowable elimination period for disability income insurance policies? A. 30 days. B. 60 days. C. 120 days. D. 180 days. The correct answer is C. 120 days. Alaska Division of Insurance regulations limit the maximum elimination period for disability income insurance policies to 120 days. The elimination period is the waiting time between the date a disability occurs and the date benefits begin to be paid. This protects insurance companies from fraudulent claims while ensuring timely benefits for truly disabled individuals. Question 27. An Alaska resident is considering purchasing a life insurance policy with a long-term care rider. What is one of the key benefits of including a long-term care rider on a life insurance policy? A. The death benefit of the life insurance policy is increased. B. Premiums for the long-term care coverage are waived if the policyholder needs long-term care services. C. The long-term care benefits are paid out tax-free regardless of how they are used. D. The life insurance policy cannot be lapsed due to non-payment of long-term care premiums. The correct answer is B. Premiums for the long-term care coverage are waived if the policyholder needs long-term care services. A long-term care rider on a life insurance policy can offer several advantages. One key benefit is that some riders waive the premiums for the long-term care portion of the policy if the policyholder requires long-term care services. This helps ensure that the life insurance policy remains active and the death benefit is still paid to beneficiaries. While the death benefit may not necessarily increase with a long-term care rider, the tax treatment of benefits and potential lapse due to non-payment would depend on the specific rider provisions. Question 28. Ms. Chen is a resident of Alaska and is pregnant with her first child. She is concerned about the medical costs associated with childbirth and is considering purchasing a health insurance policy. Alaska has a mandated maternity coverage law. What does this law mean for Ms. Chen? A. All health insurance plans sold in Alaska must cover the cost of prenatal care. B. All health insurance plans sold in Alaska must cover the cost of childbirth with no exclusions. C. All employers in Alaska must offer health insurance plans that cover childbirth. D. Ms. Chen is eligible for Medicaid to cover the cost of childbirth. The correct answer is B. All health insurance plans sold in Alaska must cover the cost of childbirth with no exclusions. Alaska's mandated maternity coverage law requires all health insurance issuers in the state to provide coverage for childbirth with no exclusions or riders that would limit or exclude this coverage. This law ensures pregnant women have access to necessary medical care during pregnancy and childbirth. While prenatal care is often covered by health insurance plans, the mandated maternity coverage law specifically addresses childbirth expenses. This law applies to health insurance plans, not employer-sponsored plans, and Medicaid eligibility is determined by income and other factors. Question 29. Mr. Garcia is a life insurance agent in Alaska and is presenting a universal life insurance policy to a client. The client inquires about the flexibility of premium payments with a universal life policy. How can Mr. Garcia accurately describe the premium payment options for a universal life insurance policy in Alaska? A. Premiums for a universal life policy in Alaska must be paid monthly and cannot be changed. B. Premiums for a universal life policy in Alaska can be paid in any amount at any time. C. Premiums for a universal life policy in Alaska must be a fixed amount but can be adjusted based on policyholder needs. D. Premiums for a universal life policy in Alaska can be adjusted within certain limits based on the policy design. The correct answer is D. Premiums for a universal life policy in Alaska can be adjusted within certain limits based on the policy design. Universal life insurance policies offer flexibility in premium payments compared to traditional whole life insurance. In Alaska, universal life policyholders can typically adjust their premium payments within certain limits set by the policy design. These adjustments can impact the cash value accumulation and death benefit of the policy. While there may be minimum and maximum premium requirements, Alaska does not mandate a specific payment frequency or prohibit any amount. Question 30. An Alaska resident is considering purchasing a health insurance plan with an out-of-network coverage option. What are some important factors for the resident to consider when evaluating out-of-network coverage? A. Out-of-network providers typically charge higher rates than in-network providers, and the plan may have lower reimbursement rates. B. Out-of-network coverage offers greater flexibility in choosing healthcare providers, but the resident may be responsible for a larger portion of the bill. C. Both in-network and out-of-network coverage have the same deductibles and copays in Alaska. D. All health insurance plans sold in Alaska are required to offer out-of-network coverage. The correct answer is B. Out-of-network coverage offers greater flexibility in choosing healthcare providers, but the resident may be responsible for a larger portion of the bill. Out-of-network coverage allows a policyholder to see healthcare providers who are not part of the plan's network. While this offers more choice, out-of-network providers typically charge higher rates, and the plan may have lower reimbursement rates for these services. This means the resident may be responsible for a higher percentage of the bill compared to using in-network providers. In-network and out-of-network coverage typically have different deductibles and copays. Alaska does not require all plans to offer out-of-network coverage. Question 31. Ms. Valdez is a resident of Alaska and is nearing retirement. She is concerned about the rising cost of healthcare and wants to explore options to supplement her Medicare coverage. Which type of insurance plan would be most beneficial for Ms. Valdez in this situation? A. HMO, Health Maintenance Organization. HMO plans typically require a primary care physician referral for specialist care. B. PPO, Preferred Provider Organization. PPO plans offer more flexibility in choosing providers but may have higher out-of-pocket costs. C. Medicare Supplement Insurance, Medigap. Medigap plans help cover out-of-pocket expenses associated with traditional Medicare. D. Long-term care insurance. Long-term care insurance is designed for extended care needs, not necessarily healthcare costs. The correct answer is C. Medicare Supplement Insurance, Medigap. As Ms. Valdez is approaching retirement and already has Medicare, a Medicare Supplement Insurance, Medigap, plan would be the most suitable option. Medigap plans are designed to work alongside traditional Medicare and help cover out-of-pocket expenses such as deductibles, co-insurance, and copays. While HMO and PPO plans are types of health insurance, they may not specifically address the gaps in Medicare coverage that Medigap plans are designed for. Long-term care insurance is intended for extended care needs, not general healthcare costs. Question 32. Mr. Anderson is a life insurance agent licensed in Alaska and is explaining the contestability clause to a client. What is the purpose of a contestability clause in a life insurance policy according to Alaska insurance regulations? A. It outlines the conditions under which the insurance company can deny a death benefit claim. B. It specifies the time period during which the insurance company can investigate the applicant's health history. C. It defines the events that are covered under the life insurance policy. D. It details the beneficiary designation process for the life insurance policy. The correct answer is A. It outlines the conditions under which the insurance company can deny a death benefit claim. A contestability clause is a standard provision in most life insurance policies. According to Alaska insurance regulations, this clause allows the insurance company to challenge the validity of a life insurance policy and potentially deny a death benefit claim within a specific time frame, typically 2 years from the policy issue date. This period allows the insurance company to investigate the applicant's health history and ensure there were no material misrepresentations on the application. The contestability clause does not define covered events, specify beneficiary designation, or outline the general coverage of the policy. Question 33. An Alaska resident is considering purchasing a critical illness insurance policy. What is a key benefit of critical illness insurance compared to a traditional disability income insurance policy? A. Critical illness insurance offers a lump sum payment upon diagnosis of a covered critical illness, while disability income insurance provides regular income replacement for covered disabilities. B. Critical illness insurance premiums are typically lower than disability income insurance premiums in Alaska. C. Critical illness insurance covers a wider range of medical conditions than disability income insurance. D. Critical illness insurance can be used to pay for any medical expenses, while disability income insurance has specific limitations. The correct answer is A. Critical illness insurance covers a wider range of medical conditions than disability income insurance. Critical illness insurance and disability income insurance are both supplemental insurance products that can help manage financial burdens associated with illness. A key difference lies in the benefit payout. Critical illness insurance provides a lump sum payment upon diagnosis of a covered critical illness, such as cancer or heart attack. This money can be used for various expenses, but it is not a guaranteed income stream. In contrast, disability income insurance replaces a portion of the policyholder's income if they become disabled and are unable to work. While critical illness insurance premiums may vary based on health and coverage, they are not inherently lower than disability income premiums. Both types of insurance have specific limitations regarding covered conditions and benefit payouts. Question 34. Ms. Lee is an agent selling accident insurance in Alaska. A client inquires about the difference between an accident indemnity policy and an accident expense policy. How can Ms. Lee accurately explain the distinction between these two types of accident insurance? A. Accident indemnity policies cover medical expenses resulting from an accident, while accident expense policies provide a lump sum benefit in case of accidental death. B. Accident indemnity policies offer a lump sum benefit for accidental death or disability, while accident expense policies reimburse specific covered expenses. C. There is no difference. Both accident indemnity and accident expense policies provide the same coverage. D. Accident indemnity policies are regulated by the federal government, while accident expense policies are regulated by the state of Alaska. The correct answer is B. Accident indemnity policies offer a lump sum benefit for accidental death or disability, while accident expense policies reimburse specific covered expenses. Accident insurance can be broken down into two main categories: accident indemnity and accident expense. Accident indemnity policies provide a lump sum benefit payout in the event of accidental death or disability. The benefit amount varies depending on the policy and the severity of the disability. Accident expense policies, on the other hand, reimburse the policyholder for specific covered expenses incurred due to an accident, such as hospital bills, ambulance services, or physical therapy. There is a significant difference in the payout structure between these two types of accident insurance. Both accident indemnity and accident expense policies are regulated by the Alaska Division of Insurance. Question 35. Mr. Hernandez is a resident of Alaska and is considering purchasing a long-term care insurance policy. He is concerned about the potential for premium increases in the future. According to Alaska regulations, what protections are in place for policyholders regarding premium increases for long-term care insurance? A. Premiums for long-term care insurance policies in Alaska cannot be increased once the policy is issued. B. Alaska mandates guaranteed renewability for long-term care insurance policies, but premiums can still be adjusted. C. Long-term care insurance carriers in Alaska must offer multiple premium payment options with varying levels of guaranteed renewability. D. All long-term care insurance policies sold in Alaska come with a fixed premium for the entire policy term. The correct answer is B. Alaska mandates guaranteed renewability for long-term care insurance policies, but premiums can still be adjusted. Alaska, like most states, requires guaranteed renewability for long-term care insurance policies. This means the insurance company cannot cancel the policy as long as premiums are paid on time. However, unlike guaranteed level premiums, premiums for long-term care insurance can be adjusted by the insurer based on factors such as claims experience or rising healthcare costs. While some carriers may offer different premium payment options, these options may not necessarily lock in a fixed premium rate. There is no guarantee that premiums will remain the same throughout the entire policy term. Question 36. An Alaska resident is considering purchasing a health insurance plan with an health savings account, HSA, option. What are some of the key benefits of using an HSA in conjunction with a qualified high-deductible health plan, HDHP, according to Alaska regulations? A. Contributions to an HSA are tax-deductible, and qualified withdrawals for medical expenses are tax-free in Alaska. B. HSAs allow for tax-free growth of funds invested within the account, and unused funds can be rolled over year after year. C. Both A and B are benefits of using an HSA with a qualified HDHP in Alaska. D. HSAs are only available to individuals enrolled in employer-sponsored health plans in Alaska. The correct answer is C. Both A and B are benefits of using an HSA with a qualified HDHP in Alaska. Health savings accounts, HSAs, offer several tax advantages when paired with a qualified high-deductible health plan, HDHP, according to Alaska regulations. Contributions made to an HSA are tax-deductible, which reduces taxable income. Additionally, qualified withdrawals used for medical expenses are tax-free. HSA funds can also be invested for tax-free growth, and any unused funds can be rolled over year after year. This allows individuals to accumulate savings for future medical needs. While HSAs can be used with employer-sponsored plans, they are also available to individuals who purchase their own health insurance on the individual market in Alaska. Question 37. Ms. Johnson is a resident of Alaska and is looking for life insurance. She is young and healthy and wants a policy with a flexible premium payment option. She is also interested in building cash value over time. Which type of life insurance policy would be most suitable for Ms. Johnson's needs? A. Term life insurance. Term life offers pure death benefit protection for a specific period but does not typically accumulate cash value. B. Whole life insurance. Whole life insurance offers guaranteed death benefit protection and builds cash value over time with fixed premiums. C. Universal life insurance. Universal life insurance offers flexible premiums and the ability to build cash value based on policyholder contributions and investment performance. D. Variable universal life insurance. Variable universal life insurance offers flexible premiums and the potential for higher cash value growth through investment options, but also carries market risk. The correct answer is C. Universal life insurance. Given Ms. Johnson's desire for a flexible premium payment option and the ability to build cash value, a universal life insurance policy would be the most suitable choice. Universal life insurance offers more flexibility than whole life insurance in terms of premium payments. Policyholders can typically adjust their premium payments within certain limits, allowing them to control the amount of cash value accumulation. While term life insurance offers no cash value accumulation, whole life insurance premiums are typically fixed. Variable universal life insurance, while offering the potential for higher cash value growth, also carries investment risk. Question 38. Mr. Garcia is a life insurance agent in Alaska and is explaining replacement of life insurance to a client. Alaska has specific regulations regarding replacement of life insurance policies. What is one of the key requirements for replacing an existing life insurance policy with a new one according to Alaska law? A. The agent must obtain written documentation from the client outlining the reasons for replacing the existing policy. B. The new policy must offer a guaranteed death benefit that is at least equal to the existing policy's benefit. C. The client must surrender the existing policy within a specific timeframe after purchasing the new policy. D. The agent is required to notify the existing life insurance company of the client's intent to replace the policy. The correct answer is A. The agent must obtain written documentation from the client outlining the reasons for replacing the existing policy. Alaska, like many states, has regulations in place to protect consumers from unfair practices when replacing life insurance policies. One key requirement is that the agent must obtain written documentation from the client explaining the reasons for replacing the existing policy. This documentation helps ensure the replacement is suitable for the client's needs and avoids situations where a new policy may not be in the client's best interest. There is no requirement for the new policy's death benefit to equal or exceed the existing policy, nor is there a mandated timeframe for surrendering the old policy. While notifying the existing carrier may be done as a courtesy, it is not typically a legal requirement. Question 39. An Alaska resident is considering purchasing a cancer insurance policy. How does cancer insurance differ from a critical illness insurance policy? A. Cancer insurance only covers the cost of treatment for diagnosed cancer, while critical illness insurance covers a wider range of critical illnesses. B. Cancer insurance offers a lump sum benefit upon diagnosis of cancer, while critical illness insurance provides income replacement if unable to work due to a covered critical illness. C. There is no difference. Cancer insurance and critical illness insurance are the same type of coverage. D. Cancer insurance premiums are typically lower than critical illness insurance premiums in Alaska. The correct answer is A. Cancer insurance only covers the cost of treatment for diagnosed cancer, while critical illness insurance covers a wider range of critical illnesses. Cancer insurance and critical illness insurance are both supplemental insurance products designed to help manage the financial burden associated with specific illnesses. However, there is a key difference in their scope of coverage. Cancer insurance typically focuses solely on diagnosed cancer and may provide benefits for treatment costs or a lump sum payout. Critical illness insurance, on the other hand, covers a wider range of critical illnesses beyond just cancer, such as heart attack, stroke, or organ failure. The specific illnesses covered will vary depending on the policy. Critical illness insurance may offer a lump sum benefit upon diagnosis or income replacement if the policyholder is unable to work due to the illness. While cancer insurance premiums may be lower due to the narrower coverage, this does not necessarily hold true in all cases. Question 40. Ms. Valdez is an Alaska resident nearing retirement and is concerned about long-term care costs. She is considering purchasing long-term care insurance. According to Alaska insurance regulations, what is one factor Ms. Valdez should consider when evaluating long-term care insurance policies? A. All long-term care insurance policies sold in Alaska must have a standardized benefit level. B. Long-term care insurance benefits are not subject to Alaska state income tax. C. The policy's benefit payout should be sufficient to cover her anticipated long-term care needs. D. Long-term care insurance premiums qualify for a tax deduction on Alaska income tax returns. The correct answer is C. The policy's benefit payout should be sufficient to cover her anticipated long-term care needs. Long-term care insurance can be a valuable tool for managing the financial risks associated with extended care needs. Alaska does not mandate standardized benefit levels for long-term care insurance policies. While long-term care benefits may be exempt from federal income tax, they are generally subject to Alaska state income tax. Tax implications can vary, so it's important to consult a tax advisor. The most crucial factor for Ms. Valdez is to choose a policy with a benefit payout that is sufficient to cover her anticipated long-term care costs. This may involve considering factors like the daily benefit amount, benefit period duration, and inflation protection riders. Question 41. Mr. Anderson is a life insurance agent licensed in Alaska and is presenting a guaranteed issue life insurance policy to a client. What is one key characteristic of a guaranteed issue life insurance policy according to Alaska regulations? A. Guaranteed issue life insurance policies offer a larger death benefit than traditional whole life policies. B. Guaranteed issue life insurance policies are available to all applicants regardless of their health condition. C. Guaranteed issue life insurance policies typically have lower premiums than traditional whole life policies. D. Guaranteed issue life insurance policies accumulate cash value at a faster rate than traditional whole life policies. The correct answer is B. Guaranteed issue life insurance policies are available to all applicants regardless of their health condition. Guaranteed issue life insurance is a specific type of life insurance policy designed for individuals who may not qualify for traditional life insurance due to health conditions. A key feature of guaranteed issue life insurance, as mandated by Alaska regulations, is that it is available to all applicants regardless of their health status. Medical underwriting is not required, making it easier for individuals with health concerns to obtain some form of life insurance coverage. Guaranteed issue policies typically offer lower death benefits than traditional whole life policies and may have limitations on the benefit amount or graded premiums in the early years. There is no guarantee that premiums will be lower or cash value accumulation will be faster than traditional life insurance. Question 42. An Alaska resident is considering purchasing a Medicare Supplement (Medigap) insurance plan. They are overwhelmed by the different plan options available. What is one factor to consider when choosing a Medigap plan in Alaska? A. All Medigap plans sold in Alaska must cover the same benefits regardless of the insurer. B. Medigap plans are standardized by the federal government, offering a set of lettered plans, Plan A, Plan B, etc., with guaranteed benefits. C. The resident should choose the Medigap plan with the lowest monthly premium. D. The resident should focus on the specific benefits offered by each Medigap plan to find one that best complements their existing Medicare coverage. The correct answer is D. The resident should focus on the specific benefits offered by each Medigap plan to find one that best complements their existing Medicare coverage. Medicare Supplement (Medigap) plans are designed to help fill the gaps in traditional Medicare coverage, such as deductibles, coinsurance, and copays. While Alaska has regulations regarding Medigap plans, they are not standardized to offer identical benefits across all insurers. Instead, the federal government establishes standardized Medigap plan names, Plan A, Plan B, etc., but allows insurers to design their own benefit packages within these guidelines. Therefore, it's crucial for the resident to carefully evaluate the specific benefits offered by each Medigap plan to find one that best addresses their out-of-pocket expenses and complements their existing Medicare coverage. Focusing solely on the premium may not be the best strategy, as a plan with a higher premium may offer more comprehensive coverage that could save money in the long run. Question 43. Ms. Lee is a resident of Alaska and is looking for individual health insurance coverage. She has a pre-existing medical condition and is concerned about being denied coverage. According to the Affordable Care Act, ACA, and Alaska regulations, what protections are in place for individuals with pre-existing conditions when purchasing health insurance? A. Insurers cannot deny coverage based on a pre-existing condition, but they can charge higher premiums. B. Insurers cannot deny coverage or charge higher premiums based solely on a pre-existing condition. C. Alaska has a high-risk pool program that provides coverage options for individuals with pre-existing conditions. D. Ms. Lee can only qualify for health insurance through a government-sponsored program if she has a pre-existing condition. The correct answer is B. Insurers cannot deny coverage or charge higher premiums based solely on a pre-existing condition. The Affordable Care Act, ACA, has significantly impacted health insurance availability for individuals with pre-existing conditions. One of the key provisions prohibits health insurance companies from denying coverage or charging higher premiums based solely on a pre-existing condition. This applies to both group health plans and individual health insurance plans offered in the marketplace. While Alaska may have additional regulations, the ACA guarantees Ms. Lee cannot be denied coverage due to her pre-existing condition. High-risk pool programs were an option before the ACA but may not be as prevalent now. Government-sponsored programs like Medicaid are available based on income and eligibility criteria, not necessarily pre-existing conditions. Question 44. Mr. Hernandez is a life insurance agent in Alaska and is explaining grace periods to a client. What is the purpose of a grace period in a life insurance policy according to Alaska regulations? A. The grace period allows the policyholder to make a premium payment after the due date without a lapse in coverage. B. The grace period defines the timeframe during which the insured can contest the policy after it is issued. C. The grace period outlines the conditions under which the beneficiary can claim the death benefit. D. The grace period specifies the events that are excluded from coverage under the life insurance policy. The correct answer is A. The grace period allows the policyholder to make a premium payment after the due date without a lapse in coverage. A grace period is a standard provision in most life insurance policies, including those sold in Alaska. It provides a short window of time, typically 30 or 31 days, after the premium due date for the policyholder to make a payment without the policy lapsing. During this grace period, the policy remains in full force and effect. This allows for some flexibility in case of missed payments due to forgetfulness or unforeseen circumstances. Grace periods do not define the timeframe for contesting the policy, outlining beneficiary claim conditions, or specifying exclusions from coverage. Question 45. An Alaska resident is considering purchasing a disability income insurance policy. They are unsure what factors to consider when evaluating different disability income insurance plans. What is one important factor to consider when choosing a disability income insurance policy? A. The monthly benefit amount should be sufficient to cover the resident's essential living expenses. B. The policy should offer a lifetime benefit period in case of disability. C. The elimination period, which is the waiting time before benefits begin, should be as short as possible. D. All disability income insurance policies sold in Alaska must offer the same benefit payout options. The correct answer is A. The monthly benefit amount should be sufficient to cover the resident's essential living expenses. Disability income insurance is designed to replace a portion of income if the policyholder becomes disabled and unable to work. When evaluating different disability income insurance plans, one crucial factor to consider is the monthly benefit amount. This amount should be sufficient to cover the resident's essential living expenses, such as housing, food, and utilities. A benefit that is too low may not adequately replace lost income and create financial hardship during a disability. While a lifetime benefit period is desirable, not all plans offer it. Elimination periods can vary, but a shorter period means benefits start sooner. Alaska does not mandate standardized benefit payout options for disability income insurance. Question 46. Ms. Johnson is an agent selling health insurance in Alaska. A client inquires about the difference between a PPO, Preferred Provider Organization, and an HMO, Health Maintenance Organization, plan. How can Ms. Johnson accurately explain the key differences between these two common health insurance plan types? A. PPO plans offer a wider network of healthcare providers but may require referrals for specialists, while HMO plans require choosing a primary care physician for all covered services. B. PPO plans typically have lower monthly premiums than HMO plans in Alaska, but HMO plans may offer lower out-of-pocket costs. C. PPO plans are better suited for individuals who need frequent specialist care, while HMO plans are ideal for those who prefer a coordinated care approach. D. There is no significant difference. Both PPO and HMO plans provide the same level of coverage in Alaska. The correct answer is A. PPO plans offer a wider network of healthcare providers but may require referrals for specialists, while HMO plans require choosing a primary care physician for all covered services. PPO, Preferred Provider Organization, and HMO, Health Maintenance Organization, are two common types of health insurance plans that differ in network access and care coordination. Ms. Johnson can explain that PPO plans offer a wider network of healthcare providers, including specialists. However, they may require a referral from a primary care physician, PCP, to see a specialist and might have higher out-of-pocket costs for using out-of-network providers. HMO plans typically require choosing a primary care physician, PCP, who coordinates all aspects of care and provides referrals to in-network specialists. HMO plans often have lower out-of-pocket costs for using in-network providers but may have a more limited network compared to PPO plans. While PPO plans may offer more flexibility in choosing providers, HMO plans can provide a more coordinated care approach with potentially lower costs for using in-network services. Question 47. Mr. Garcia is a resident of Alaska and is considering purchasing a long-term care insurance policy. He is concerned about the possibility of the premiums increasing significantly in the future. Alaska regulations require long-term care insurance carriers to offer inflation protection riders. What is the purpose of an inflation protection rider on a long-term care insurance policy? A. An inflation protection rider guarantees the policyholder will not have to pay premiums beyond a certain age. B. An inflation protection rider allows the policyholder to increase the death benefit of the life insurance policy over time. C. An inflation protection rider automatically increases the long-term care benefit payout to keep pace with rising healthcare costs. D. An inflation protection rider offers the option to waive premiums if the policyholder becomes disabled. The correct answer is C. An inflation protection rider automatically increases the long-term care benefit payout to keep pace with rising healthcare costs. Long-term care costs tend to rise with inflation. An inflation protection rider on a long-term care insurance policy is an optional benefit that helps address this concern. It automatically increases the long-term care benefit payout over time, ideally keeping pace with inflation in healthcare costs. This ensures the benefit amount remains sufficient to cover future long-term care needs. Inflation protection riders do not guarantee stopping premium payments, affect the death benefit, or offer premium waiver benefits for disability. Question 48. Ms. Petrova is a resident of Alaska and is looking for disability income insurance. She is a dentist and understands the importance of having income protection in case she becomes disabled and unable to work. Ms. Petrova is particularly interested in own occupation coverage. According to Alaska regulations, what does own occupation coverage typically mean in the context of disability income insurance? A. Ms. Petrova will receive benefits if she is unable to perform the duties of her specific occupation as a dentist, even if she can work in another occupation. B. Ms. Petrova will receive benefits if she is disabled and can no longer work in any occupation for which she is qualified. C. Ms. Petrova will only receive benefits if the disability prevents her from working any job whatsoever. D. Own occupation is not a relevant term in Alaska disability insurance policies. The correct answer is A. Ms. Petrova will receive benefits if she is unable to perform the duties of her specific occupation as a dentist, even if she can work in another occupation. Own occupation coverage is a valuable feature in disability income insurance policies, especially for professionals like Ms. Petrova. Alaska regulations allow own occupation coverage to define disability based on the inability to perform the duties of the insured's specific occupation, even if they could potentially work in a different field. This ensures Ms. Petrova would receive benefits if a disability prevents her from practicing dentistry, even if she could perform other types of work. Question 49. Mr. Tanaka is a resident of Alaska and wants to purchase a guaranteed renewable health insurance policy. According to Alaska law, which of the following statements is most accurate regarding guaranteed renewable health insurance policies? A. Mr. Tanaka can be denied coverage based on his health status. B. The insurer can increase his premiums solely due to his age. C. Mr. Tanaka can renew the policy for as long as he pays the premiums, even if his health condition changes. D. The policy benefits can be reduced by the insurer if Mr. Tanaka files too many claims. The correct answer is C. Mr. Tanaka can renew the policy for as long as he pays the premiums, even if his health condition changes. Guaranteed renewable health insurance policies in Alaska are subject to specific regulations outlined in Title 21 of the Alaska Statutes, Chapter 36. These regulations ensure policyholders have access to continuous coverage, regardless of changes in their health. Question 50. Mrs. Lopez is an agent licensed to sell life insurance in Alaska. A potential client inquires about a universal life insurance policy. Which of the following statements by Mrs. Lopez would be most compliant with Alaska insurance regulations? A. Universal life insurance is a great investment because the cash value grows at a guaranteed rate. B. With universal life insurance, you can pay flexible premiums to fit your budget. C. Universal life insurance death benefit will pay out only if the premiums are paid in full. D. Universal life insurance policies are not subject to any state regulations. The correct answer is B. With universal life insurance, you can pay flexible premiums to fit your budget. Alaska Department of Insurance requires agents to accurately represent insurance products. Question 51. An Alaska resident is diagnosed with a pre-existing condition. They are considering applying for a health insurance policy. According to Alaska's guaranteed issue health insurance law, which of the following statements is true? A. The insurance company can deny coverage based on the pre-existing condition. B. The guaranteed issue policy will have a pre-existing condition exclusion clause. C. The guaranteed issue policy will be offered at a lower premium than a standard health plan. D. Alaska does not have a guaranteed issue health insurance program. The correct answer is B. The guaranteed issue policy will have a pre-existing condition exclusion clause. Alaska does have a guaranteed issue health insurance program, but these plans are allowed to have pre-existing condition exclusions for a specific period, typically up to 6 months. This means the plan might not cover treatments related to the pre-existing condition during the exclusion period. Question 52. Ms. Lee is a resident of Alaska and wants to cancel her individual health insurance policy. Under Alaska law, what is the earliest possible date Ms. Lee can terminate her coverage after submitting a written cancellation request? A. The effective cancellation date will be the date the insurer receives the request. B. Ms. Lee's coverage will end at the end of the next billing cycle. C. The policy can only be canceled during the open enrollment period. D. Ms. Lee cannot cancel her individual health insurance policy in Alaska. The correct answer is B. Ms. Lee's coverage will end at the end of the next billing cycle. In Alaska, individual health insurance policies can be canceled following a written request, with the termination date typically being the end of the current billing cycle. This provides a buffer period to ensure smooth coverage transition. Question 53. An Alaska resident is considering purchasing a long-term care insurance policy. According to Alaska regulations, which of the following statements regarding long-term care insurance benefits is most accurate? A. Long-term care insurance policies in Alaska are required to offer a home health care benefit. B. The daily benefit amount for long-term care services cannot exceed a specific limit set by the state. C. All long-term care insurance policies sold in Alaska must include inflation protection for benefits. D. Insurers can deny long-term care claims based on the policyholder's pre-existing conditions. The correct answer is B. The daily benefit amount for long-term care services cannot exceed a specific limit set by the state. Alaska has specific regulations for long-term care insurance benefits. Question 54. Mr. Garcia is a life insurance agent licensed in Alaska. He is explaining replacement of life insurance to a client. According to Alaska insurance regulations, which of the following statements by Mr. Garcia would be most compliant? A. Replacement is always a good idea because you can get a newer policy with better benefits. B. There is no need to disclose the existence of your current life insurance policy when applying for a new one. C. You can simply cancel your old policy after the new one is issued. D. We can discuss the reasons for replacement and ensure you understand the potential consequences of replacing your current coverage. The correct answer is D. We can discuss the reasons for replacement and ensure you understand the potential consequences of replacing your current coverage. Alaska mandates agents to follow fair replacement practices when discussing life insurance replacement. Question 55. An Alaska resident is considering purchasing a Medicare supplement policy, Medigap. According to Alaska insurance regulations, which of the following statements regarding Medigap policies is true? A. Medigap plans are standardized across all insurance companies in Alaska. B. These plans can deny coverage based on pre-existing conditions. C. Medigap policies can be sold to anyone regardless of their Medicare eligibility. D. Residents can only enroll in a Medigap plan during the Medigap open enrollment period. The correct answer is A. Medigap plans are standardized across all insurance companies in Alaska. Medigap plans in Alaska, like all states, follow standardized benefit packages, Plan A, B, C, etc. This allows for easier comparison between insurers offering the same plan type. Question 56. Ms. Chen is an agent licensed to sell accident and health insurance in Alaska. A client inquires about a disability income insurance policy. Which of the following statements by Ms. Chen would be most accurate regarding disability income insurance benefits? A. Disability benefits will continue to be paid even if the policyholder reaches full retirement age. B. The definition of disability used by all disability income insurance policies in Alaska is identical. C. There is no waiting period before benefits begin after a qualifying disability. D. Benefits are paid regardless of the cause of disability. The correct answer is D. Benefits are paid regardless of the cause of disability. As long as the disability meets the policy definition, benefits are typically paid regardless of the cause, accident, illness, etc. Question 57. An Alaska resident is considering purchasing a critical illness insurance policy. According to Alaska insurance regulations, which of the following statements regarding critical illness insurance is most accurate? A. Critical illness insurance policies are considered major medical insurance and require minimum state-mandated benefits. B. Insurers can deny a claim if the critical illness is diagnosed within a certain period of policy purchase. C. There is a standardized list of critical illnesses covered by all critical illness insurance policies in Alaska. D. Benefits are paid as a lump sum directly to the policyholder. The correct answer is D. Benefits are paid as a lump sum directly to the policyholder. Critical illness insurance is considered supplemental insurance and provides a lump sum benefit upon diagnosis of a covered critical illness. Question 58. An Alaska resident is nearing retirement and considering purchasing an annuity. According to Alaska insurance regulations, which of the following statements regarding annuities is true? A. All annuities sold in Alaska must offer a guaranteed lifetime withdrawal benefit. B. An annuity cannot be used as part of a qualified retirement plan, such as an IRA. C. Insurers cannot impose surrender charges if the policyholder withdraws funds within the first year. D. Annuity proceeds are generally not subject to income tax until withdrawn. The correct answer is D. Annuity proceeds are generally not subject to income tax until withdrawn. Annuity benefits grow tax-deferred within the policy. Income tax is typically applied only when funds are withdrawn. Question 59. Ms. Hernandez is a resident of Alaska who recently purchased a health insurance policy. She is concerned about the policy's exclusions. According to Alaska Department of Insurance guidelines, which of the following is the most appropriate action for Ms. Hernandez to take? A. Contact the insurance agent who sold her the policy and demand changes to the exclusions. B. File a formal complaint with the Alaska Department of Insurance if she disagrees with the exclusions. C. Review the policy documents thoroughly to understand the exclusions and limitations. D. Ignore the exclusions, as they are not likely to be enforced by the insurer. The correct answer is C. Review the policy documents thoroughly to understand the exclusions and limitations. Policy documents outline coverage details, including exclusions. Understanding these is crucial for informed decisions. Question 60. An Alaska health insurance company is developing a new health insurance plan. According to Alaska insurance regulations, which of the following statements regarding marketing materials for the new plan is most compliant? A. The marketing materials can downplay the exclusions and limitations of the plan. B. The insurer does not need to disclose pre-existing condition exclusions in the marketing materials. C. Clear and concise summaries of coverage, benefits, and exclusions must be included in the marketing materials. D. Testimonials from satisfied customers can be used without disclosing any potential conflicts of interest. The correct answer is C. Clear and concise summaries of coverage, benefits, and exclusions must be included in the marketing materials. Alaska insurance regulations require fair and accurate marketing practices. Transparency regarding coverage details is crucial. Question 61. Ms. Lee is a resident of Alaska and is considering purchasing a long-term care insurance policy. According to Alaska Statute 21.89.30b, which of the following statements is most accurate regarding required benefits in Ms. Lee's policy? A. The policy must offer benefits for home health care only. B. The policy must provide coverage for institutional care and community-based care services. C. The policy can exclude coverage for custodial care. D. The policy must include benefits for Alzheimer's disease care specifically. The correct answer is B. The policy must provide coverage for institutional care and community-based care services. Alaska Statute 21.89.30b mandates that long-term care insurance policies offered in the state must provide coverage for both institutional care, nursing homes, and community-based care services, adult daycare, home health care. While option C is partially true, custodial care can be excluded. A comprehensive policy should cover both institutional and some forms of community-based care. Option D is not a requirement, though some policies may offer Alzheimer's-specific benefits. Question 62. Mr. Anderson is a life insurance agent licensed in Alaska. An interested client inquires about a guaranteed renewable life insurance policy. According to Alaska Administrative Code Title III, Insurance, Chapter 35, Life Insurance, what is one key feature Mr. Anderson should explain about guaranteed renewable life premiums? A. Premiums will remain level throughout the entire policy period. B. Premiums can increase based on the policyholder's age and health. C. Premiums are guaranteed for the first 5 years only. D. The insurance company can cancel the policy if premiums are not paid on time. The correct answer is A. Premiums will remain level throughout the entire policy period. Alaska Administrative Code Title III, Chapter 35 outlines regulations for life insurance policies in the state. Guaranteed renewable life insurance is a type of policy where the insurer guarantees the insurability of the policyholder for renewal periods. Notably, premiums for guaranteed renewable policies typically remain level throughout the entire policy period, unlike term life insurance where premiums can increase with age. While option B applies to some life insurance products, it's not a guaranteed feature of guaranteed renewable policies. Options C and D are incorrect. Guaranteed renewability ensures continued coverage and on-time premium payment is the policyholder's responsibility, not a reason for cancellation by the insurer. Question 63. Ms. Garcia is a health insurance agent in Alaska and is explaining health insurance policy rescission to a client. Based on Alaska Statute 21.89.220a, which of the following scenarios would qualify for rescission of a health insurance policy by the insurer? A. The policyholder fails to make a premium payment within the grace period. B. The policyholder misrepresented their health on the application in good faith. C. The policyholder files a claim for a pre-existing condition exceeding the policy's exclusion period. D. The policyholder cancels the policy within 30 days of receiving it. The correct answer is B. The policyholder misrepresented their health on the application in good faith. Alaska Statute 21.89.220a addresses rescission, which is the cancellation of a policy by the insurer. An insurer can rescind a health insurance policy if the policyholder made a material misrepresentation of fact on the application. However, the key point is that the misrepresentation must be done intentionally, not in good faith, to qualify for rescission. Option A would result in a lapse, not rescission. Options C and D are not grounds for rescission by the insurer under Alaska law. Question 64. An insurance company is developing a new health insurance plan for small businesses in Alaska. The plan will offer coverage for mental health services. According to Alaska Statute 21.89.360b, what is one requirement the insurance company must adhere to regarding mental health parity? A. The annual or lifetime dollar limit for mental health benefits must be equal to that of physical health benefits. B. The plan can require pre-authorization for mental health services but not for physical health services. C. The definition of a network provider can be different for mental health compared to physical health. D. The plan can offer a higher copay for mental health services compared to physical health services. The correct answer is A. The annual or lifetime dollar limit for mental health benefits must be equal to that of physical health benefits. Alaska Statute 21.89.360b mandates mental health parity in health insurance plans offered in the state. This means that the financial requirements, such as annual or lifetime dollar limits, for mental health benefits must be substantially equal to the coverage provided for physical health services. Option B would violate parity. While pre-authorization is a common practice, it cannot be applied differently to mental health services under parity rules. Option C. Similarly, copays for mental health services cannot be significantly higher than those for physical health services. Option D. Question 65. Mr. Hernandez is a resident of Alaska and is considering applying for Medicare supplemental insurance, Medigap. He is aware of standardized Medigap plans offered nationwide. According to Alaska Statute 21.89.52a, what is one additional benefit some Medigap plans may offer in Alaska that is not federally standardized? A. Coverage for prescription drugs. B. Coverage for dental services. C. Increased coverage for hospital stays. D. Coverage for vision care. The correct answer is C. Increased coverage for hospital stays. Alaska Statute 21.89.520a allows Medigap insurers in Alaska to offer standardized plans along with Medigap plans with additional benefits specific to the state. These additional benefits cannot modify core benefits mandated in standardized plans. While options A, B, and D might be appealing, they are not typical supplemental benefits offered by Medigap plans. However, some Alaska Medigap plans may offer increased coverage for hospital stays, exceeding what original Medicare covers. Question 66. Ms. Baker is a life insurance agent in Alaska and is explaining different life insurance policy options to a client. The client inquires about a universal life insurance policy. According to Alaska Administrative Code Title III, Insurance, Chapter 25, Reserves and Policy Provisions for Life Insurance, what is a key characteristic of a universal life insurance policy that Ms. Baker should highlight? A. The death benefit remains level throughout the entire policy period. B. The premium amount is fixed and cannot be changed. C. The policy accumulates a cash value component that can grow over time. D. The policy only pays out a death benefit, no cash value exists. The correct answer is C. The policy accumulates a cash value component that can grow over time. Alaska Administrative Code Title III, Chapter 25 outlines regulations for life insurance policies in the state. Universal life insurance is a type of flexible premium, adjustable death benefit policy. A key feature Ms. Baker should explain is that these policies accumulate a cash value component. The policyholder can access this cash value through loans or withdrawals, subject to policy limitations. Option A is not true for all universal life policies. Premiums can be flexible in some cases. Option B. Option D describes a traditional term life insurance policy, not a universal life policy. Question 67. An insurance company is developing a new accident and health insurance policy for residents of Alaska. The policy will exclude coverage for certain injuries sustained while participating in extreme sports. According to Alaska Statute 21.89(e), what information must be disclosed in the policy regarding these exclusions? A. Only the general category of extreme sports needs to be mentioned. B. A specific list of all extreme sports excluded from coverage is required. C. The policy can simply state injuries due to risky behavior are not covered. D. No specific disclosure about the exclusion is required by Alaska law. The correct answer is B. A specific list of all extreme sports excluded from coverage is required. Alaska Statute 21.89(e) mandates clear and specific language regarding exclusions in accident and health insurance policies. When an insurer excludes coverage for certain activities, like extreme sports, the policy must define those exclusions clearly. Option A is inadequate as it lacks details. Option C uses ambiguous language and wouldn't meet disclosure requirements. Option D is incorrect. Clear communication of exclusions is essential. By requiring a specific list, Option B, policyholders can make informed decisions about coverage and potential risks. Question 68. Ms. Chen is a resident of Alaska and is considering replacing her existing individual health insurance plan with a new one. According to Alaska Statute 21.89(62)(a), what is one factor Ms. Chen won't need to consider when determining if she qualifies for guaranteed issuance of a new health insurance policy? A. Pre-existing health conditions. B. Age. C. Geographic location within Alaska. D. Employment status. The correct answer is C. Geographic location within Alaska. Alaska Statute 21.89(62)(a) addresses guaranteed issuance in the context of health insurance reform. This provision ensures that qualified individuals cannot be denied health insurance or charged higher premiums based on certain factors. Notably, geographic location within Alaska is not a criterion for guaranteed issuance. Ms. Chen should consider pre-existing conditions, age, and employment status as these can impact eligibility under guaranteed issuance rules. Question 69. Mr. Davis is a life insurance agent licensed in Alaska and is presenting Variable Universal Life Insurance, VUL, to a client. According to Alaska Administrative Code Title III, Insurance, Chapter 29, Variable Life Insurance, what is one key difference Mr. Davis should explain between VUL and traditional universal life insurance? A. VUL policies offer a guaranteed minimum death benefit, while traditional universal life does not. B. VUL allows policyholders to invest the cash value in various subaccounts, while traditional universal life has a fixed interest rate for the cash value. C. VUL premiums are typically higher than traditional universal life premiums. D. VUL policies have a shorter minimum guaranteed death benefit period compared to traditional universal life. The correct answer is B. VUL allows policyholders to invest the cash value in various subaccounts, while traditional universal life has a fixed interest rate for the cash value. Alaska Administrative Code Title III, Chapter 29 outlines regulations for variable life insurance products. VUL is a type of universal life insurance with an investment component. Mr. Davis should highlight this key difference. VUL policyholders can choose to invest their cash value in various subaccounts linked to different investment options, e.g., stocks, bonds. This offers the potential for higher growth but also carries investment risk. Traditional universal life, on the other hand, typically offers a fixed interest rate on the cash value, providing a more predictable accumulation. Option A is not generally true. Premiums can vary, but option C is not a defining difference. Option D is not a common distinction between the two product types. Question 70. An insurance company is developing a new group health insurance plan for small employers in Alaska. The plan will offer coverage for preventive care services. According to Alaska Statute 21.89.210a, what is one preventive care service the plan must cover without any cost-sharing requirements, like copay or deductible? A. Treatment for minor illnesses, e.g., common cold. B. Annual physical examinations. C. Hospitalization for preventive surgeries. D. Mental health screenings. The correct answer is B. Annual physical examinations. Alaska Statute 21.89.210a mandates coverage for certain preventive care services in group health insurance plans offered in the state. This includes preventive services identified by the U.S. Preventive Services Task Force, USPSTF. Annual physical examinations are a common preventive service on the USPSTF list. Option A is typically not considered preventive care. While some preventive surgeries might be covered, hospitalization wouldn't be without cost sharing. Option C. Mental health screenings might be covered, but without cost sharing is not mandatory under this statute. Option D. Question 71. Ms. Johnson is a resident of Alaska and is considering purchasing a long-term care insurance policy. According to Alaska Statute 21.89.140a, what is one consumer protection mandated for long-term care insurance policies in Alaska? A. The policy must guarantee coverage for home health care for at least 3 years. B. The insurer cannot cancel the policy except for non-payment of premiums. C. The policy benefit payout cannot be less than a specific dollar amount each day. D. The insured cannot be required to wait for a specific period before using benefits. The correct answer is B. The insurer cannot cancel the policy except for non-payment of premiums. Alaska Statute 21.89.040a outlines consumer protections for long-term care insurance policies. One key protection is guaranteed renewability. This means the insurer cannot cancel the policy as long as premiums are paid on time, except for fraud or misrepresentation on the application. Option A might be a benefit offered by some policies, but not a guaranteed minimum. The daily benefit payout amount, option C, is determined by the policyholder's chosen plan. While there might be waiting periods for certain benefits, not all benefits require waiting periods, option D. Question 72. Mr. Khan is a health insurance agent in Alaska and is explaining health insurance replacement rules to a client. According to Alaska Administrative Code Title III, Insurance, Chapter 37, Replacement of Health Insurance, what is one advantage of replacing an existing health insurance plan with a new one during the guaranteed issuance enrollment period? A. The new plan may offer a lower deductible but with a higher premium. B. The new plan cannot impose any pre-existing condition exclusions. C. The new plan will automatically cover any ongoing medical treatment. D. The old plan will continue to provide coverage until the new plan starts. The correct answer is B. The new plan cannot impose any pre-existing condition exclusions. Alaska Administrative Code Title III, Chapter 37 addresses regulations for replacing health insurance. Guaranteed issuance enrollment periods offer specific advantages. Notably, during these periods, new health insurance plans cannot deny coverage or impose pre-existing condition exclusions, option B. This allows individuals with pre-existing conditions to switch plans without jeopardizing coverage. Option A might be a possibility, but not a guaranteed benefit of replacement. The new plan won't necessarily cover ongoing treatment automatically, option C. The old plan typically terminates upon the new plan's effective date, option D. Question 73. An insurance company is developing a new credit life insurance policy for borrowers in Alaska. According to Alaska Statute 21.37.022b, what is one limitation on the amount of credit life insurance that can be sold in Alaska? A. The policy cannot exceed the outstanding loan balance at any given time. B. The maximum coverage amount is based on the borrower's age and health. C. The policy cannot cover more than a specific percentage of the loan amount. D. The coverage period cannot extend beyond the loan repayment term. The correct answer is C. The policy cannot cover more than a specific percentage of the loan amount. Alaska Statute 21.37.220b outlines limitations on credit life insurance in the state. One key restriction is that the amount of coverage cannot exceed a specific percentage of the loan amount. This protects borrowers from being oversold on unnecessary insurance. Option A might be a feature of some policies, but not a statutory requirement. Age and health are not typically considered for coverage limits, option B. The coverage period typically aligns with the loan term, but some exceptions might exist, option D. Question 74. Ms. Lee is a resident of Alaska and is looking to supplement her existing group health insurance plan with an individual health insurance policy. She has a pre-existing condition for high blood pressure. Under the Alaska Guaranteed Issue Law, which of the following statements is most accurate regarding Ms. Lee's ability to obtain an individual health insurance policy? A. Ms. Lee cannot be denied coverage for her pre-existing condition, but the insurer can charge her a higher premium based on her health status. B. Ms. Lee is guaranteed coverage for her pre-existing condition, and the insurer cannot charge her a higher premium. C. Ms. Lee's pre-existing condition can be used by the insurer to deny coverage altogether. D. Ms. Lee can only obtain a high-deductible health plan, HDHP, due to her pre-existing condition. The correct answer is A. Ms. Lee cannot be denied coverage for her pre-existing condition, but the insurer can charge her a higher premium based on her health status. The Alaska Guaranteed Issue Law prohibits health insurance companies from denying coverage or charging higher premiums based on an applicant's health status, including pre-existing conditions. While insurers can set different rates for individual plans, these rates cannot be based on health status. Question 75. Mr. Hernandez is a life insurance agent licensed in Alaska and wants to sell accident and health insurance. According to Alaska insurance regulations, which of the following statements is true regarding Mr. Hernandez's licensing requirements? A. Mr. Hernandez only needs his life insurance license to sell both life and accident and health insurance products. B. Mr. Hernandez must obtain a separate accident and health insurance license in addition to his life insurance license. C. Mr. Hernandez can sell accident and health insurance under his life insurance license as long as the products are limited to disability income insurance. D. There are no separate licensing requirements for accident and health insurance in Alaska. The correct answer is B. Mr. Hernandez must obtain a separate accident and health insurance license in addition to his life insurance license. In Alaska, life insurance and accident and health insurance are separate lines of insurance requiring distinct licenses. Mr. Hernandez must obtain a separate accident and health insurance license to sell these products. Question 76. An Alaska resident is replacing their existing life insurance policy with a new one. According to the Alaska Replacement Life Insurance Disclosure Model Regulation, which of the following actions by the agent selling the new policy would be a violation? A. Providing the applicant with a side-by-side comparison chart highlighting the features of both the old and new policies. B. Failing to disclose the grace period for premium payments in the new policy. C. Encouraging the applicant to surrender the old policy immediately without considering the potential surrender charges. D. Explaining the different beneficiary options available under the new policy. The correct answer is C. Encouraging the applicant to surrender the old policy immediately without considering the potential surrender charges. The Alaska Replacement Life Insurance Disclosure Model Regulation requires agents to provide a fair and objective presentation of both the new and existing policies. While encouraging the applicant to switch policies is acceptable, the agent should not pressure them to surrender the old policy without considering potential surrender charges. This could be financially disadvantageous for the applicant. Question 77. Ms. Petrova is a resident of Alaska and is considering a long-term care insurance policy. According to Alaska regulations, which of the following statements is most accurate regarding benefits for long-term care insurance policies? A. Long-term care insurance policies in Alaska are mandated to offer benefits for home health care only. B. Insurers in Alaska are prohibited from offering long-term care insurance policies with inflation protection riders. C. All long-term care insurance policies sold in Alaska must include a mandatory benefit period of at least 3 years. D. Insurers in Alaska must offer guaranteed renewable long-term care insurance policies. The correct answer is D. Insurers in Alaska must offer guaranteed renewable long-term care insurance policies. Alaska mandates that all guaranteed long-term care insurance policies sold in the state must be guaranteed renewable. This means the insurer cannot cancel the policy as long as the insured continues to pay premiums. Question 76. Mr. Anderson is an agent selling health insurance in Alaska and receives a phone call from a potential client interested in a Medicare supplement policy. According to Alaska's Medicare Supplement Buyer's Guide requirements, which of the following actions by Mr. Anderson would be a violation? A. Providing the potential client with a copy of the Medicare Supplement Buyer's Guide. B. Enrolling the client in a Medicare supplement plan over the phone without an in-person meeting. B. Discussing the benefits and limitations of different Medicare supplement plans offered by various insurers. D. Failing to disclose that Medicare supplement plans do not cover all out-of-pocket medical expenses. The correct answer is B. Discussing the benefits and limitations of different Medicare supplement plans offered by various insurers. While Alaska allows for some flexibility in the sales process, enrolling a client in a Medicare supplement plan solely over the phone without an in-person meeting goes against the spirit of informed consent. An in-person meeting allows for a more thorough discussion of the client's needs and ensures they understand the plan details before enrolling. Question 77. A young couple in Alaska is expecting their first child and is looking for health insurance coverage for the newborn. Under the Alaska Newborn and Child Health Insurance Program, ANCHIP, which of the following statements is true? A. ANCHIP only covers newborns with pre-existing medical conditions. B. ANCHIP requires employers to offer health insurance plans that cover newborns. C. All newborns born in Alaska are automatically enrolled in ANCHIP. D. ANCHIP provides health insurance coverage for newborns up to a certain age, regardless of the parent's income. The correct answer is D. ANCHIP provides health insurance coverage for newborns up to a certain age, regardless of the parent's income. ANCHIP is a public program that provides health insurance coverage to all qualified newborns born in Alaska, regardless of their parents' income status. Coverage typically extends until the child reaches 19 years old. Question 78. Ms. Chen is a resident of Alaska and is diagnosed with cancer. She has a disability income insurance policy that pays her a monthly benefit if she is unable to work due to her illness. The policy defines disability as being unable to perform the material duties of her regular occupation. Ms. Chen's doctor advises her to take a leave of absence from work but believes she can eventually return to her duties with some modifications to her workload. In this scenario, which of the following statements is most likely true regarding Ms. Chen's ability to collect benefits under her disability income insurance policy? A. Ms. Chen will automatically be eligible for benefits because she has a cancer diagnosis. B. Ms. Chen will be eligible for benefits as long as her doctor advises against working. C. The insurance company will determine if Ms. Chen's limitations prevent her from performing the material duties of her job as defined in the policy. D. Ms. Chen will be ineligible for benefits because some modifications to her workload are possible. The correct answer is C. The insurance company will determine if Ms. Chen's limitations prevent her from performing the material duties of her job as defined in the policy. Disability income insurance policies typically define disability based on the insured's inability to perform the essential duties of their regular occupation. Even though Ms. Chen has a medical condition, the insurance company will assess whether her limitations prevent her from fulfilling these essential duties as outlined in the policy. This evaluation may involve reviewing her medical records and job description. Question 78. Mr. Garcia is an agent selling life insurance in Alaska and is contacted by a potential client interested in a universal life insurance policy. According to Alaska insurance regulations, which of the following statements is most accurate regarding the features of universal life insurance? A. Universal life insurance policies in Alaska must accumulate a minimum death benefit over time. B. Premiums for universal life insurance policies in Alaska are guaranteed to remain level throughout the policy term. C. Cash value accumulated in a universal life insurance policy in Alaska is guaranteed to grow at a specific interest rate. D. Universal life insurance policies in Alaska offer flexible premium payments and the ability to access the cash value. The correct answer is D. Universal life insurance policies in Alaska offer flexible premium payments and the ability to access the cash value. A key feature of universal life insurance is the flexibility in premium payments and the ability to access the accumulated cash value. Policyholders can adjust premium payments within certain limits and borrow against the cash value, which may affect the death benefit if not repaid. However, unlike whole life insurance, Universal life policies do not guarantee a specific growth rate for the cash value. Question 79. An Alaska resident is considering a health insurance plan with a health savings account, HSA. According to IRS regulations regarding HSAs, which of the following statements is true? A. Anyone can contribute to an HSA regardless of their health insurance plan. B. There are no contribution limits for HSAs. C. Funds remaining in an HSA at year-end can only be used for qualified medical expenses in the following year. D. HSAs can only be used in conjunction with high-deductible health plans, HDHPs, as defined by the IRS. The correct answer is D. HSAs can only be used in conjunction with high-deductible health plans, HDHPs, as defined by the IRS. To qualify for an HSA, individuals must be enrolled in a high-deductible health plan, HDHP, with specific minimum deductible and maximum out-of-pocket limits set by the IRS annually. HSAs offer tax advantages for contributions, growth on investments, and qualified medical expense withdrawals. Funds remaining in the HSA at year-end can be carried forward and used for qualified medical expenses in future years. Question 80. During the enrollment process for a new individual health insurance policy in Alaska, an agent is legally required to disclose which of the following to the applicant? A. The agent's commission earned from selling the policy. B. The agent's professional opinion on the best plan for the applicant. C. The availability of guaranteed issue plans for applicants with pre-existing conditions. D. Recommendations for specific doctors or hospitals within the plan's network. The correct answer is C. The availability of guaranteed issue plans for applicants with pre-existing conditions. Alaska's guaranteed issue law ensures individuals with pre-existing conditions can obtain health insurance. Agents are required to disclose the availability of these plans during enrollment. While agents can offer general guidance, they cannot provide medical advice or recommendations for specific healthcare providers. Disclosure of commission earned is not mandatory. Question 81. An Alaska resident is considering a critical illness insurance policy. According to Alaska insurance regulations, which of the following statements is accurate regarding benefits for critical illness insurance policies? A. Critical illness insurance policies are mandated to cover all major illnesses. B. Insurers in Alaska are prohibited from offering critical illness insurance with riders that pay for long-term care. C. Benefits under a critical illness policy are paid regardless of whether the insured continues to work. D. The definition of a critical illness is standardized across all critical illness insurance policies offered in Alaska. The correct answer is C. Benefits under a critical illness policy are paid regardless of whether the insured continues to work. Critical illness insurance policies provide a lump sum benefit upon diagnosis of a covered critical illness, such as cancer or heart attack. The benefit is paid regardless of whether the insured continues to work and can be used for various expenses. However, the specific illnesses covered and their definitions can vary among insurers. Alaska does not mandate specific illnesses to be covered, nor does it prohibit riders for long-term care expenses, although these may be subject to separate regulations. Question 82. Ms. Johnson is an agent selling Medicare supplement insurance in Alaska and receives a call from a potential client interested in a Medigap plan. According to the National Association of Health Underwriters, NAHU, ethical code, which of the following actions by Ms. Johnson would be most appropriate? A. Pressuring the client to enroll in a specific Medigap plan before they have a chance to review all their options. B. Focusing solely on the benefits of Medigap plans without discussing the potential costs involved. C. Encouraging the client to ask questions and clearly explaining the differences between various Medigap plans. D. Offering to enroll the client in a Medigap plan over the phone without first verifying their Medicare eligibility. The correct answer is C. Encouraging the client to ask questions and clearly explaining the differences between various Medigap plans. The National Association of Health Underwriters, NAHU, ethical code emphasizes professionalism and acting in the best interests of clients. Ms. Johnson should encourage the client to ask questions and clearly explain the differences between Medigap plans to ensure they make an informed decision. Pressuring for a quick sale, neglecting to discuss costs, or enrolling without verifying eligibility would be unethical practices. Question 83. An Alaska resident is considering a group health insurance plan offered by their employer. According to the Health Insurance Portability and Accountability Act, HIPAA, regulations, which of the following statements is true regarding the employer's ability to disclose an employee's health information? A. The employer can freely disclose an employee's health information to anyone without their consent. B. The employer can only disclose an employee's health information for purposes of administering the group health plan. C. The employer must obtain written consent from the employee before disclosing any health information. D. HIPAA regulations do not apply to group health plans offered by employers. The correct answer is B. The employer can only disclose an employee's health information for purposes of administering the group health plan. HIPAA safeguards the privacy of individuals' health information. Employers offering group health plans can only disclose an employee's health information for plan administration purposes, such as determining eligibility or processing claims. They must obtain written consent from the employee for any other disclosure. Question 84. Mr. Lopez is an agent selling accident insurance in Alaska and wants to clarify the scope of coverage for a specific accident insurance policy. According to Alaska insurance regulations, accident insurance policies typically cover which of the following? A. All injuries or illnesses resulting from any accident. B. Only accidental injuries that result in hospitalization. C. Accidental death and specific serious injuries as defined in the policy. D. Accidental injuries and illnesses, with benefits based on the nature and severity of the injury, illness. The correct answer is C. Accidental death and specific serious injuries as defined in the policy. Accident insurance policies typically provide benefits for accidental death and specific serious injuries outlined in the policy, such as fractures or dislocations. They generally do not cover all injuries or illnesses, nor do they require hospitalization to trigger benefits. Question 85. An Alaska resident is nearing retirement and is considering an annuity to supplement their income. According to annuity product features, which of the following statements is most accurate regarding immediate annuities? A. Immediate annuities provide a guaranteed stream of income payments that begin after a set deferral period. B. Immediate annuities offer a lump sum payout of the principal amount invested upon annuitization. C. The income stream from an immediate annuity can fluctuate based on market performance. D. Immediate annuities are a type of life insurance product that pays a death benefit. The correct answer is A. Immediate annuities provide a guaranteed stream of income payments that begin after a set deferral period. Immediate annuities provide a guaranteed stream of income payments that begin shortly after the purchase, typically within a year. The income stream is usually fixed, but some variations may offer inflation protection or other features. Immediate annuities do not offer a lump sum payout or function as life insurance, although some may offer a death benefit as an additional feature. Question 86. Ms. Walker is a resident of Alaska and is considering a cancer insurance policy. According to Alaska insurance regulations, which of the following statements is true regarding benefits for cancer insurance policies? A. Cancer insurance policies are mandated to cover all types of cancer. B. Insurers in Alaska are prohibited from offering cancer insurance policies with riders for additional benefits. C. Benefits under a cancer insurance policy are triggered solely upon a cancer diagnosis. D. The definition of cancer is identical across all cancer insurance policies offered in Alaska. The correct answer is C. Benefits under a cancer insurance policy are triggered solely upon a cancer diagnosis. Cancer insurance policies typically provide a lump sum benefit or specific expense reimbursement upon diagnosis of a covered cancer. The definition of cancer and covered stages may vary among insurers. Alaska does not mandate coverage for all cancer types, nor does it prohibit riders for additional benefits, although these may be subject to separate regulations. Benefits are usually triggered by a covered diagnosis, not necessarily treatment. Question 87. An Alaska resident is applying for an individual health insurance policy. They have a pre-existing condition and are concerned about potential premium rates. According to the Affordable Care Act, ACA, provisions, which of the following statements is accurate regarding rating factors for health insurance premiums? A. Insurers in Alaska can base individual health insurance premiums on an applicant's health status, including pre-existing conditions. B. The ACA allows insurers to charge healthy individuals higher premiums to offset the costs of covering sicker individuals. C. The ACA prohibits health insurance companies from denying coverage or charging higher premiums based on health status. D. The ACA mandates that all individual health insurance plans must cover a specific set of essential health benefits. The correct answer is C. The ACA prohibits health insurance companies from denying coverage or charging higher premiums based on health status. A key provision of the ACA is the prohibition against health insurance companies denying coverage or charging higher premiums based on health status, including pre-existing conditions. This ensures individuals with pre-existing conditions can access affordable health insurance. The ACA also mandates that all individual health insurance plans must cover a set of essential health benefits, often referred to as Essential Health Benefits Package. Question 88. Mr. Lee is an agent licensed to sell life insurance in Alaska and is contacted by a potential client interested in a variable universal life insurance policy. According to Alaska insurance regulations, which of the following statements is most accurate regarding variable universal life insurance? A. Variable universal life insurance policies in Alaska offer a guaranteed minimum death benefit. B. Premiums for variable universal life insurance policies in Alaska are fixed throughout the policy term. C. The cash value in a variable universal life insurance policy in Alaska grows at a predetermined interest rate. D. Variable universal life insurance policies in Alaska allow for investment flexibility within the cash value accumulation component. The correct answer is D. Variable universal life insurance policies in Alaska allow for investment flexibility within the cash value accumulation component. Variable universal life insurance offers flexibility in premium payments and allows policyholders to invest the cash value portion in subaccounts linked to the market. The cash value growth and death benefit are not guaranteed and fluctuate based on investment performance. While there is no minimum death benefit guarantee, there is a minimum death benefit requirement to ensure the policy remains life insurance and not simply an investment vehicle. Alaska insurance regulations may have specific requirements for variable product suitability and risk disclosure. Question 89. An Alaska resident is considering a long-term care insurance policy. According to the Alaska Department of Insurance regulations, which of the following statements is most accurate regarding long-term care insurance shopping tips? A. It is advisable to prioritize the daily benefit amount over the benefit period when choosing a long-term care insurance plan. B. All long-term care insurance policies sold in Alaska are guaranteed renewable, regardless of the policyholder's health status. C. Focusing solely on the premium amount is the most important factor when comparing long-term care insurance plans. D. Individuals should consider their potential future needs and inflation when evaluating long-term care insurance options. The correct answer is D. Individuals should consider their potential future needs and inflation when evaluating long-term care insurance options. When shopping for long-term care insurance, it's crucial to consider factors beyond just the premium amount. Individuals should analyze their potential future needs for care, the benefit period, length of time benefits are paid, and daily benefit amount received each day for covered services. Inflation protection ensures the benefits keep pace with rising healthcare costs. While Alaska mandates guaranteed renewability for some long-term care policies, it's important to understand the specific terms and conditions of each plan. Question 90. Mr. Hernandez is an agent selling disability income insurance in Alaska and wants to clarify the concept of own occupation disability for a client. According to the definition used in most disability income insurance policies, which of the following statements is true regarding own occupation disability? A. Own occupation disability benefits are payable if the insured becomes disabled and cannot perform any gainful occupation. B. Own occupation disability benefits are triggered if the insured experiences a disability that prevents them from returning to their specific occupation, even if they could perform other work. C. Own occupation disability benefits are only available for a limited period after the disability occurs. D. Own occupation disability benefits are automatically converted to any occupation disability benefits after a certain time frame. The correct answer is B. Own occupation disability benefits are triggered if the insured experiences a disability that prevents them from returning to their specific occupation, even if they could perform other work. Own occupation disability is a common feature in disability income insurance policies. It provides benefits if the insured becomes disabled and cannot perform the substantial and material duties of their specific occupation, even if they could perform other types of work. This ensures financial protection if a disability prevents them from returning to their particular field. Some policies may have a time limit on the own occupation benefit period, after which any occupation disability provisions might apply, depending on the policy terms. The benefits are not automatically converted, and the specific definition of own occupation can vary slightly among insurers. Question 91. An Alaska resident is enrolled in a group health insurance plan offered by their employer. They are considering enrolling their adult child as a dependent on the plan. According to the Affordable Care Act, ACA, provisions regarding dependent coverage, which of the following statements is accurate? A. The ACA mandates that all employer-sponsored group health plans must cover adult children regardless of their age. B. There are no limitations on the maximum age until which an adult child can be covered under a parent's employer-sponsored plan. C. The ACA allows adult children to remain on a parent's employer plan until they turn 26, even if they are married or financially independent. D. Employers can set age limitations for adult child coverage under their group health plans, as long as they comply with certain ACA requirements. The correct answer is C. The ACA allows adult children to remain on a parent's employer plan until they turn 26, even if they are married or financially independent. The ACA allows adult children to remain on a parent's employer-sponsored group health plan until they turn 26, regardless of their marital or employment status. This provision is often referred to as young adult coverage. It's important to note that employers can establish other eligibility requirements, such as proof of dependent status or residency, but they cannot deny coverage solely based on the child's age up to 26. Question 92. Ms. Garcia is an agent selling health insurance in Alaska and receives a client inquiry about short-term health insurance plans. According to Alaska regulations regarding short-term health insurance, which of the following statements is true? A. Short-term health insurance plans in Alaska can offer comprehensive health coverage similar to traditional health insurance plans. B. Short-term health insurance plans in Alaska are guaranteed renewable for multiple terms. C. There are no maximum limits on the duration of coverage for short-term health insurance plans in Alaska. D. Short-term health insurance plans in Alaska may not cover certain pre-existing conditions. The correct answer is D. Short-term health insurance plans in Alaska may not cover certain pre-existing conditions. Short-term health insurance plans are intended to provide temporary coverage, typically for a limited period, often around 3 months, with a possible renewal period up to a maximum limit set by the state. They generally offer limited benefits compared to traditional health insurance and may not cover pre-existing conditions. Alaska, like many states, may have specific regulations regarding the duration and renewability of short-term health plans. Question 93. An Alaska resident is considering a Medicare Supplement (Medigap) insurance policy. According to the National Association of Health Underwriters (NAHU) Ethical Code, which of the following actions by a Medigap agent would be most appropriate? A. Recommending a specific Medigap plan to a client without understanding their individual needs and budget. B. Encouraging the client to enroll in a Medigap plan while pressuring them to make a quick decision. C. Providing the client with clear explanations of different Medigap plan options and helping them compare benefits and costs. D. Offering to waive the application fee for a specific Medigap plan the agent prefers. The correct answer is C. Providing the client with clear explanations of different Medigap plan options and helping them compare benefits and costs. The National Association of Health Underwriters, NAHU, emphasizes ethical conduct and acting in the best interests of clients. A Medigap agent should explain the different Medigap plan options, considering the client's specific needs and budget. Pressuring for a quick sale or offering misleading information would be unethical practices. Offering to waive application fees may be a marketing strategy but doesn't necessarily benefit the client in choosing the most suitable plan. Question 94. Mr. Jones is an agent licensed to sell accident insurance in Alaska and is explaining the claims process to a client. According to Alaska insurance regulations, which of the following statements is accurate regarding filing accident insurance claims? A. Accident insurance claims in Alaska typically require extensive medical documentation regardless of the severity of the injury. B. Claimants in Alaska have an unlimited time frame to file an accident insurance claim after the accident occurs. C. The specific claim filing procedures and deadlines are standardized for all accident insurance policies in Alaska. D. Accident insurance policies in Alaska may require timely notification and submission of documented proof to initiate the claims process. The correct answer is D. Accident insurance policies in Alaska may require timely notification and submission of documented proof to initiate the claims process. While there is no universal standard for claim filing procedures across all accident insurance policies, Alaska regulations may establish general timeframes for submitting claims. Specific policies will outline the required documentation and notification procedures. Accident insurance policies often require timely notification of the accident and submission of documented proof, such as medical records or police reports, to initiate the claims process. Question 95. An Alaska resident is considering a health savings account, HSA, in conjunction with a high-deductible health plan, HDHP. According to IRS regulations regarding HSAs, which of the following statements is true regarding contributions to HSAs? A. There are no contribution limits for individuals enrolled in an HDHP. B. Anyone can contribute to an HSA regardless of their health insurance plan. C. HSA contribution limits are the same for individuals and families enrolled in an HDHP. D. The maximum HSA contribution amount is adjusted annually by the IRS to account for inflation. The correct answer is D. The maximum HSA contribution amount is adjusted annually by the IRS to account for inflation. The IRS sets annual contribution limits for HSAs, with higher limits for families compared to individuals. These limits are adjusted annually to account for inflation. To be eligible to contribute to an HSA, individuals must be enrolled in a qualified high-deductible health plan, HDHP, as defined by the IRS. Contributions made to an HSA offer tax advantages, including tax-deductible contributions, tax-free growth on investments within the HSA, and tax-free qualified medical expense withdrawals. Question 96. Ms. Lee is a resident of Alaska and is considering a long-term care insurance policy. According to the Alaska Division of Insurance Regulations, which of the following statements is accurate regarding benefits for long-term care insurance policies? A. Long-term care insurance policies in Alaska are mandated to provide home health care services only. B. Benefits under a long-term care insurance policy are paid regardless of the policyholder's location of care, such as a nursing home or assisted living facility. C. All long-term care insurance policies offered in Alaska must include a mandatory elimination period before benefits begin. D. Insurers in Alaska are prohibited from offering long-term care insurance policies with riders for additional benefits, such as hospice care coverage. The correct answer is B. Benefits under a long-term care insurance policy are paid regardless of the policyholder's location of care, such as a nursing home or assisted living facility. Long-term care insurance benefits typically cover a range of services, including home health care, assisted living facilities, and nursing homes, depending on the specific policy. The location of care does not necessarily restrict benefit eligibility. While some policies may have an elimination period, a waiting period before benefits begin, it's not mandatory. Alaska regulations may allow insurers to offer riders for additional benefits, such as hospice care coverage, although these might be subject to separate approval processes. Question 97. Mr. Hernandez is an agent licensed to sell life insurance in Alaska and is contacted by a potential client interested in a term life insurance policy. According to Alaska insurance regulations, which of the following statements is most accurate regarding term life insurance policies? A. Term life insurance policies in Alaska offer a guaranteed death benefit for the entire lifetime of the insured. B. Premiums for term life insurance policies in Alaska typically remain level throughout the policy term. C. The cash value component of a term life insurance policy in Alaska grows at a predetermined interest rate. D. Term life insurance policies in Alaska provide temporary coverage for a specified period, with a guaranteed death benefit only if death occurs within the term. The correct answer is D. Term life insurance policies in Alaska provide temporary coverage for a specified period, with a guaranteed death benefit only if death occurs within the term. Term life insurance offers coverage for a specified period, term, at a relatively lower premium compared to permanent life insurance products. The death benefit is only paid if the insured dies within the term. Term life insurance policies do not typically accumulate a cash value, and premiums may increase upon renewal for subsequent terms. Question 98. An Alaska resident is considering a critical illness insurance policy. According to Alaska insurance regulations, which of the following statements is true regarding the application process for critical illness insurance? A. Alaska mandates that all critical illness insurance applications require a medical exam regardless of the applicant's age or health status. B. Critical illness insurance applications in Alaska do not require any disclosure of pre-existing medical conditions. C. Insurers in Alaska are prohibited from denying critical illness insurance coverage based solely on age. D. The application process for critical illness insurance in Alaska is standardized and requires the same information from all applicants. The correct answer is C. Insurers in Alaska are prohibited from denying critical illness insurance coverage based solely on age. Alaska regulations likely do not mandate medical exams for all critical illness insurance applications. The application process typically involves questions about the applicant's health history, and insurers may require additional medical information or screenings based on the applicant's age, health status, or the requested coverage amount. While Alaska may not allow denials solely based on age, insurers can consider health risks when evaluating applications and may deny coverage or offer policies with higher premiums based on pre-existing conditions. The specific application requirements may vary among insurers. Question 99. Mr. Garcia is an agent selling disability income insurance in Alaska and wants to clarify the concept of benefit period for a client. According to the definition used in most disability income insurance policies, which of the following statements is true regarding the benefit period? A. The benefit period is the time frame during which the insurance company investigates a disability claim. B. The benefit period determines how long an insured person has to file a disability claim after becoming disabled. C. The benefit period defines the maximum time frame for which the insurance company will pay benefits if the insured remains disabled. D. The benefit period is synonymous with the elimination period, which is the waiting time before benefits begin. The correct answer is C. The benefit period defines the maximum time frame for which the insurance company will pay benefits if the insured remains disabled. The benefit period in a disability income insurance policy defines the maximum time frame for which the insurance company will pay benefits if the insured remains disabled and meets the policy's definition of disability. This period can vary depending on the policy design and may be expressed in years, to age 65, for example, or as a lifetime benefit. The elimination period is a separate concept and refers to the waiting time between the onset of disability and when benefit payments begin. Question 100. An Alaska resident is enrolled in a Medicare Advantage (MA) plan. According to CMS, Centers for Medicare and Medicaid Services, regulations, which of the following statements is accurate regarding Medicare Advantage plans? A. Medicare Advantage plans are a type of Medigap supplement insurance policy sold by private companies. B. Beneficiaries enrolled in a Medicare Advantage plan typically pay a separate premium in addition to their Part B premium. C. Medicare Advantage plans cannot deny coverage or charge higher premiums based on a beneficiary's health status. D. Beneficiaries can be enrolled in both a Medicare Advantage plan and a Medigap plan at the same time. The correct answer is B. Beneficiaries enrolled in a Medicare Advantage plan typically pay a separate premium in addition to their Part B premium. Medicare Advantage (MA) plans are an alternative way to receive Medicare benefits through private insurance companies contracted with CMS. Beneficiaries typically pay a separate premium for an MA plan in addition to their Part B premium, although some MA plans have $0 premiums. MA plans offer coordinated care networks and may include additional benefits not covered by traditional Medicare, such as vision or dental coverage. Unlike Medigap supplement insurance, MA plans can consider health status when enrolling beneficiaries and may require prior authorization for certain services. Beneficiaries generally cannot be enrolled in both a Medicare Advantage plan and a Medigap plan at the same time, with some exceptions. Question 101. An Alaska resident is considering a cancer insurance policy to supplement their health insurance. According to Alaska insurance regulations, which of the following statements is true regarding exclusions in cancer insurance policies? A. Cancer insurance policies in Alaska are prohibited from having any exclusions for specific types of cancer. B. All cancer insurance policies offered in Alaska must cover any recurrence of a covered cancer diagnosis. C. Insurers in Alaska can exclude pre-existing cancer conditions from coverage under a cancer insurance policy. D. The definition of cancer and covered stages must be identical across all cancer insurance policies sold in Alaska. The correct answer is C. Insurers in Alaska can exclude pre-existing cancer conditions from coverage under a cancer insurance policy. Cancer insurance policies typically provide benefits for specific cancer diagnoses or events outlined in the policy. Alaska regulations likely do not mandate coverage for all cancer types or recurrences. Insurers can exclude pre-existing conditions, including cancer, from coverage. The definition of cancer and covered stages can vary among insurers, so careful policy review is essential. Question 102. Ms. Walker is an agent licensed to sell health insurance in Alaska and is explaining the concept of a deductible to a client. According to common health insurance terminology, which of the following statements is accurate regarding deductibles? A. The deductible is the portion of covered medical expenses that the policyholder pays out of pocket before the insurance company starts paying benefits. B. Once the deductible is met, the insurance company pays 100% of all covered medical expenses for the remainder of the policy period. C. The deductible amount typically remains the same throughout the insured person's lifetime. D. Health insurance plans with higher deductibles generally come with lower monthly premiums. The correct answer is D. Health insurance plans with higher deductibles generally come with lower monthly premiums. The deductible is the amount a policyholder pays out of pocket for covered medical expenses before the insurance company starts sharing the costs. After meeting the deductible, the insurance company typically pays a certain percentage, coinsurance, of covered expenses, and the policyholder is responsible for the remaining balance up to an out-of-pocket maximum. Plans with higher deductibles typically have lower monthly premiums because the policyholder shoulders a greater portion of the initial costs. Deductible amounts may change over time as policy terms are renewed. Question 103. An Alaska resident is considering hospital indemnity insurance as a supplement to their existing health insurance plan. According to Alaska insurance regulations, which of the following statements is most accurate regarding hospital indemnity insurance? A. Hospital indemnity insurance policies reimburse the insured for a fixed cash benefit amount upon hospitalization, regardless of actual medical expenses. B. Hospital indemnity insurance policies are a type of Medicare supplement insurance specifically designed for beneficiaries. C. Insurers in Alaska are prohibited from offering hospital indemnity insurance plans with riders that provide additional benefits. D. Benefits under a hospital indemnity insurance policy can be used to pay for deductibles, copays, or other out-of-pocket medical expenses. The correct answer is A. Hospital indemnity insurance policies reimburse the insured for a fixed cash benefit amount upon hospitalization, regardless of actual medical expenses. Hospital indemnity insurance is a secondary health insurance product that provides a fixed cash benefit for each night spent in the hospital, regardless of actual medical expenses incurred. This benefit can be used to help cover out-of-pocket costs such as deductibles, copays, or other expenses not covered by primary health insurance. It's not a substitute for major medical insurance and doesn't reimburse for actual medical bills. While it can be used for various out-of-pocket expenses, its primary purpose is to help offset hospitalization costs. Alaska, like many states, may have specific regulations regarding hospital indemnity insurance benefits and marketing. Question 104. Mr. Jones is an agent selling life insurance in Alaska and is contacted by a potential client interested in a universal life insurance policy. According to Alaska insurance regulations, which of the following statements is true regarding universal life insurance policies? A. Universal life insurance policies in Alaska accumulate a guaranteed cash value that grows at a fixed interest rate. B. Premiums for universal life insurance policies in Alaska must remain level throughout the policy term. C. The death benefit for a universal life insurance policy in Alaska cannot be decreased by the policyholder. D. Universal life insurance policies in Alaska offer flexibility in premium payments and the ability to access the accumulated cash value. The correct answer is D. Universal life insurance policies in Alaska offer flexibility in premium payments and the ability to access the accumulated cash value. A key feature of universal life insurance is the flexibility in premium payments and the ability to access the cash value accumulated from a portion of the premiums. Policyholders can adjust premium payments within certain limits and borrow against the cash value, which may affect the death benefit if not repaid. Unlike whole life insurance, universal life policies do not guarantee a specific growth rate for the cash value, although some may offer minimum interest guarantees. Alaska regulations may have specific requirements for minimum premium payments to maintain coverage. While the death benefit can be changed within certain limits, universal life policies typically allow for decreasing the death benefit to reduce premium costs. Question 105. An Alaska resident is nearing retirement and is considering an annuity to supplement their income. According to annuity product features, which of the following statements is most accurate regarding fixed annuities? A. Fixed annuities offer a variable stream of income payments that fluctuate based on market performance. B. Fixed annuities provide a guaranteed growth rate for the accumulated value throughout the deferral period. C. The income stream from a fixed annuity typically begins immediately after the purchase. D. Fixed annuities offer a guaranteed stream of income payments based on a predetermined interest rate. The correct answer is D. Fixed annuities offer a guaranteed stream of income payments based on a predetermined interest rate. Fixed annuities offer a guaranteed stream of income payments based on a predetermined interest rate applied to the accumulated value during the deferral period, the time between purchase and income payout. The income stream typically begins at a pre-selected date after the deferral period, and the payment amount is fixed throughout the income period chosen by the annuitant, lifetime income, for a specific number of years, etc. Fixed annuities do not offer a variable income stream or guaranteed growth rate for the accumulated value during the deferral period, although some may offer minimum guarantees. Question 106. An Alaska resident is considering travel insurance for an upcoming trip. According to Alaska insurance regulations, which of the following statements is true regarding travel insurance products? A. All travel insurance plans sold in Alaska must cover cancellation for any reason. B. Travel insurance benefits are standardized across all travel insurance policies offered in Alaska. C. Insurers in Alaska are prohibited from denying travel insurance coverage based solely on the applicant's age. D. Travel insurance policies typically cover trip cancellation, medical emergencies, and lost baggage while traveling. The correct answer is D. Travel insurance policies typically cover trip cancellation, medical emergencies, and lost baggage while traveling. Travel insurance is a secondary insurance product designed to provide financial protection for covered unforeseen events that may disrupt or cause financial loss during a trip. Common coverages include trip cancellation, due to covered reasons like illness or bad weather, medical emergencies while traveling, which may not be fully covered by primary health insurance, and lost or damaged baggage. Alaska likely does not regulate standardized benefits, and the specific coverage details will vary among travel insurance plans. While age may be a factor considered during underwriting, insurers cannot deny coverage solely based on age. Question 107. Ms. Garcia is an agent licensed to sell Medicare supplement insurance plans, Medigap, in Alaska and is explaining the concept of Medigap Plan G according to the National Association of Health Underwriters, NAHU, ethical code. Which of the following actions by Ms. Garcia would be most appropriate? A. Recommending Plan G to all her clients regardless of their individual needs and financial situation. B. Enrolling a client in Plan G without fully explaining the benefits, limitations, and costs compared to other Medigap plan options. C. Providing the client with objective information about Plan G, including its advantages, disadvantages, and how it compares to other standardized Medigap plans. D. Offering the client a discount on the premium for Plan G if they enroll that day. The correct answer is C. Providing the client with objective information about Plan G, including its advantages, disadvantages, and how it compares to other standardized Medigap plans. The National Association of Health Underwriters, NAHU, emphasizes ethical conduct and acting in the best interests of clients. When recommending a Medigap plan, Ms. Garcia should explain the specific benefits, limitations, and costs of Plan G compared to other standardized Medigap plans, Plan A, B, D, etc., to ensure the client can make an informed decision based on their individual needs and financial situation. Pressuring for a quick sale or offering misleading information would be unethical practices. Offering discounts may be a marketing strategy but is not part of a professional needs-based approach. Question 108. An Alaska resident is considering a guaranteed issue life insurance policy. According to Alaska insurance regulations, which of the following statements is accurate regarding guaranteed issue life insurance? A. Guaranteed issue life insurance policies are available to all applicants regardless of their health status or age. B. Guaranteed issue life insurance policies typically offer high death benefit amounts. C. Premiums for guaranteed issue life insurance policies are generally lower than for traditional life insurance. D. Insurers in Alaska are required to offer guaranteed issue life insurance policies. The correct answer is A. Guaranteed issue life insurance policies are available to all applicants regardless of their health status or age. Guaranteed issue life insurance is a type of simplified life insurance designed to provide basic death benefit coverage. A key feature is that issuance is guaranteed regardless of the applicant's health status within certain age and coverage limits set by the state. Premiums for guaranteed issue life insurance are typically higher than for traditional life insurance because the insurer assumes a greater risk by not considering health factors. Alaska may set limitations on the guaranteed issue policy's death benefit amount and availability based on factors like age. While some states mandate insurers to offer guaranteed issue policies, Alaska's regulations might be different. Question 109. An Alaska resident is considering disability income insurance. According to the Alaska Division of Insurance Regulations, which of the following statements is true regarding disability income insurance policies? A. All disability income insurance policies offered in Alaska must provide benefits for any medical condition that prevents the insured from working. B. Insurers in Alaska are prohibited from using occupation as a factor when determining disability under a disability income insurance policy. C. Alaska mandates that all disability income insurance policies include a long-term care rider. D. The definition of disability is standardized across all disability income insurance policies sold in Alaska. The correct answer is D. The definition of disability is standardized across all disability income insurance policies sold in Alaska. The definition of disability is a crucial element in a disability income insurance policy and can vary among insurers. Alaska likely does not mandate a specific definition, so careful review of the policy wording is essential. Disability income benefits are typically triggered when the insured meets the policy's definition of disability, which often considers inability to perform the substantial and material duties of their specific occupation, own occupation, or any gainful occupation, any occupation. Occupation can be a factor used in assessing disability under the policy terms. Long-term care riders are optional add-ons that may be available with some disability income insurance policies, but they are not mandated by Alaska regulations. Question 110. Ms. Walker is an agent licensed to sell health insurance in Alaska and is explaining the concept of out-of-network coverage to a client. According to common health insurance terminology, which of the following statements is accurate regarding out-of-network coverage? A. Out-of-network coverage refers to benefits provided by healthcare professionals who participate in the policyholder's insurance plan. B. Out-of-network coverage typically reimburses a higher percentage of covered medical expenses compared to in-network providers. C. Using out-of-network providers generally requires no prior authorization from the insurance company. D. Out-of-network coverage typically comes with lower out-of-pocket costs for the policyholder compared to in-network coverage. The correct answer is A. Out-of-network coverage refers to benefits provided by healthcare professionals who participate in the policyholder's insurance plan. Health insurance plans typically have a network of contracted healthcare providers, in-network. Out-of-network coverage refers to benefits provided by healthcare professionals who do not participate in the plan's network. Using out-of-network providers often results in lower reimbursement rates from the insurance company, meaning the policyholder may be responsible for a higher percentage of the bill, out-of-pocket costs, compared to using in-network providers. In some cases, out-of-network coverage might require prior authorization from the insurance company before services are rendered. Question 111. An Alaska resident is enrolled in an employer-sponsored health insurance plan. According to the Health Insurance Portability and Accountability Act, HIPAA, regulations, which of the following statements is accurate regarding protected health information? FI. A. An individual can authorize the release of their FI to anyone they choose, regardless of the purpose. B. HIPAA regulations allow health insurance companies to sell FI to marketing companies without patient consent. C. Healthcare providers must obtain a patient's written authorization before using or disclosing their FI for most purposes. D. HIPAA regulations only apply to group health plans and do not cover individual health insurance plans. The correct answer is C. Healthcare providers must obtain a patient's written authorization before using or disclosing their FI for most purposes. The Health Insurance Portability and Accountability Act, HIPAA, protects the privacy of a person's health information, FI. HIPAA regulations require healthcare providers and health plans to obtain a patient's written authorization before using or disclosing their FI for most purposes, with some exceptions for treatment, payment activities, and healthcare operations. Individuals have the right to access and amend their FI and can request an accounting of disclosures. HIPAA applies to most health plans, including employer-sponsored group health plans and individual health insurance plans. While individuals can authorize the release of their FI, it must be a specific authorization and cannot be a blanket authorization for any use or disclosure. HIPAA restricts the sale of FI to marketing companies without patient consent. Question 112. An Alaska resident is considering critical illness insurance to supplement their health insurance plan. According to the Alaska Division of Insurance Regulations, which of the following statements is true regarding benefits under critical illness insurance policies? A. Critical illness insurance benefits are triggered solely upon diagnosis of a covered critical illness, regardless of treatment costs. B. Benefits under a critical illness insurance policy are paid directly to the healthcare provider to cover medical expenses. C. Alaska mandates a specific payout amount for each covered critical illness under critical illness insurance policies. D. The insured has complete discretion on how to use the benefit payout from a critical illness insurance policy. The correct answer is D. The insured has complete discretion on how to use the benefit payout from a critical illness insurance policy. Critical illness insurance provides a lump sum cash benefit upon diagnosis of a covered critical illness, such as cancer, heart attack, or stroke. The benefit payout is typically not tied to treatment costs and can be used by the insured for any purpose, covering medical bills, lost income, or other expenses. Alaska likely does not mandate a specific payout amount, and the benefit amount depends on the policy purchased. While benefits are typically paid directly to the insured, some policies may allow for payment to a designated beneficiary or healthcare provider upon agreement. Question 113. Mr. Jones is an agent licensed to sell accident insurance in Alaska and is explaining the concept of accidental death benefit to a client. According to common accident insurance terminology, which of the following statements is accurate regarding accidental death benefit? A. The accidental death benefit is a standard feature included in all health insurance plans. B. Accidental death benefit only pays out if death occurs within 24 hours of the accident. C. The accidental death benefit is a specific benefit offered under some accident insurance policies and typically pays a lump sum upon accidental death. D. Accidental death benefits are triggered by any death, regardless of whether it was accidental or due to natural causes. The correct answer is C. The accidental death benefit is a specific benefit offered under some accident insurance policies and typically pays a lump sum upon accidental death. Accidental death benefit is a specific coverage option available under some accident insurance policies. It provides a lump sum cash benefit to the beneficiary named on the policy if the insured dies as a direct result of a covered accident. The definition of accident and the benefit amount can vary among policies. Accidental death benefit is not a standard feature in health insurance plans, and it has no time limit for death to occur as long as it's a direct result of the covered accident. Question 114. An Alaska resident is considering long-term care insurance to help cover potential future expenses. According to the Alaska Department of Insurance Consumer Resources, which of the following statements is most accurate regarding long-term care insurance costs? A. The cost of long-term care insurance is typically the same for all applicants regardless of age and health status. B. Premiums for long-term care insurance policies typically decrease over time as the policyholder ages. C. Long-term care insurance policies with a longer benefit period generally come with lower premiums. D. Early enrollment, at a younger age, in a long-term care insurance policy typically results in lower premiums. The correct answer is D. Early enrollment, at a younger age, in a long-term care insurance policy typically results in lower premiums. The cost of long-term care insurance is influenced by several factors, including the applicant's age, health status, the desired benefit amount, and the length of the benefit period. Generally, enrolling in a long-term care insurance policy at a younger age, when you are healthier, results in lower premiums compared to waiting until later in life when the risk of needing care increases. Policies with a longer benefit period, the timeframe for which benefits are paid, typically have higher premiums compared to those with shorter benefit periods. Question 115. An Alaska resident is considering a Medicare Supplement Insurance Plan, Medigap, to supplement their Medicare benefits. According to Medicare guidelines, which of the following statements is true regarding Medigap Plan F? A. Medigap Plan F covers the Part B deductible but not the Part A deductible. B. Medigap Plan F is the only standardized Medigap plan currently available for purchase by new Medicare beneficiaries. C. Benefits under Medigap Plan F typically include coverage for foreign travel emergencies. D. Medigap Plan F offers the most comprehensive coverage among the standardized Medigap plans. The correct answer is D. Medigap Plan F offers the most comprehensive coverage among the standardized Medigap plans. Medicare supplement plans, Medigap, are standardized plans offered by private insurers to help fill coverage gaps in Original Medicare, Parts A and B. Medigap Plan F is one of the most comprehensive plans, covering the Part A deductible, coinsurance for in-hospital care, and the Part B deductible. It may also cover additional benefits not included in Original Medicare, such as foreign travel emergency medical expenses, although this is not guaranteed and can vary by insurer. While new Medigap plan options may be available, several standardized Medigap plans, including Plan F, are no longer available for purchase by new Medicare beneficiaries due to changes implemented in recent years. Question 116. Ms. Garcia is an agent licensed to sell annuities in Alaska and is explaining different types of annuities to a client. According to annuity product features, which of the following statements is accurate regarding variable annuities? A. Variable annuities offer a guaranteed minimum return on the investment regardless of market performance. B. The value of a variable annuity grows based on the performance of the underlying investments chosen by the annuitant. C. Variable annuities typically come with a death benefit that pays out a guaranteed amount to beneficiaries. D. Variable annuities offer a fixed stream of income payments throughout the income period. The correct answer is B. The value of a variable annuity grows based on the performance of the underlying investments chosen by the annuitant. Variable annuities are a type of annuity product that links the growth of the accumulation value to the performance of underlying investments chosen by the annuitant, similar to a mutual fund. The value can fluctuate based on market gains or losses. Unlike fixed annuities that offer a guaranteed growth rate, variable annuities do not have a guaranteed minimum return. Some variable annuities may offer a guaranteed death benefit that pays out a minimum amount to beneficiaries if the annuitant dies before the income period begins. Variable annuities typically offer the option to convert the accumulated value into a stream of income payments during the income period, but the income stream itself is not guaranteed and can vary based on the account value at that time. Question 117. An Alaska resident is nearing retirement and is considering a long-term care insurance policy. According to the Alaska Division of Insurance Regulations, which of the following statements is true regarding long-term care insurance benefits? A. Long-term care insurance benefits are only paid if the policyholder receives care in a nursing home setting. B. Benefits under a long-term care insurance policy typically cannot be used to pay for assisted living facility costs. C. Alaska mandates that all long-term care insurance policies have a mandatory waiting period before benefits begin. D. The definition of long-term care is identical across all long-term care insurance policies offered in Alaska. The correct answer is C. Alaska mandates that all long-term care insurance policies have a mandatory waiting period before benefits begin. Long-term care insurance benefits are designed to help cover the costs associated with custodial care services due to chronic illness or disability. These services can be provided in various settings, including nursing homes, assisted living facilities, or even the policyholder's home. The specific covered services and settings will vary depending on the policy terms. While some states may mandate minimum benefit standards, Alaska's regulations likely do not require coverage for all assisted living facility costs. The definition of long-term care can vary among insurers, so careful policy review is essential. It's common for long-term care insurance policies to have an elimination period, waiting period, before benefits begin, but Alaska likely does not mandate a specific waiting period duration. Question 118. An Alaska resident is considering a high-deductible health plan, HDHP, with a health savings account, HSA, to save for future medical expenses. According to IRS regulations, which of the following statements is true regarding contributions to HSAs? A. Anyone can contribute to an HSA regardless of whether they are enrolled in an HDHP. B. The maximum contribution amount for HSAs is the same for all individuals, regardless of age. B. Funds remaining in an HSA at the end of the year cannot be carried over to the next year. D. Contributions to HSAs are tax-deductible up to certain limits. The correct answer is D. Contributions to HSAs are tax-deductible up to certain limits. Health savings accounts, HSAs, are tax-advantaged accounts designed to work with high-deductible health plans, HDHPs. Contributions to HSAs are tax-deductible up to certain limits set by the IRS and can be used to pay for qualified medical expenses. Funds remaining in an HSA at year-end typically carry over to the next year and can be invested for long-term growth. There are eligibility requirements for contributing to an HSA, and only individuals enrolled in a qualified HDHP can contribute. The contribution limits vary depending on factors like whether you have individual or family coverage in the HDHP. Question 119. Ms. Walker is an agent licensed to sell disability income insurance in Alaska and is explaining the concept of benefit period to a client. According to common disability income insurance terminology, which of the following statements is accurate regarding the benefit period? A. The benefit period is the time frame during which the insurance company investigates a disability claim. B. The benefit period determines how long an insured person has to file a disability claim after becoming disabled. C. The benefit period defines the maximum timeframe for which the insurance company will pay benefits if the insured remains disabled and meets the policy's definition of disability. D. The benefit period is synonymous with the elimination period, which is the waiting time before benefits begin. The correct answer is C. The benefit period defines the maximum timeframe for which the insurance company will pay benefits if the insured remains disabled and meets the policy's definition of disability. We covered this one earlier, but here it is again for reference. The benefit period in a disability income insurance policy defines the maximum timeframe for which the insurance company will pay benefits if the insured remains disabled and meets the policy's definition of disability. This period can vary depending on the policy design and may be expressed in years, to age 65, for example, or as a lifetime benefit. The elimination period is a separate concept and refers to the waiting time between the onset of disability and when benefit payments begin. Question 120. An Alaska resident is considering cancer insurance to supplement their health insurance plan. According to Alaska insurance regulations, which of the following statements is most accurate regarding benefits under cancer insurance policies? A. Benefits under a cancer insurance policy are triggered solely upon a positive cancer screening test. B. Alaska mandates a specific payout amount for each covered cancer stage under cancer insurance policies. C. Cancer insurance benefits are typically paid directly to the healthcare provider to cover treatment costs. D. The definition of cancer and covered stages can vary among cancer insurance policies offered in Alaska. The correct answer is D. The definition of cancer and covered stages can vary among cancer insurance policies offered in Alaska. Cancer insurance policies provide a lump sum cash benefit upon diagnosis of a covered cancer event, as outlined in the policy. A positive screening test alone typically wouldn't trigger a benefit payout. Alaska likely does not mandate a specific payout amount, and the benefit amount depends on the specific cancer diagnosed and the policy purchased. Benefits are typically paid directly to the insured and can be used for any purpose, including treatment costs, lost income, or other expenses. The definition of cancer and covered stages can vary among insurers, so careful policy review is essential.